I'm the ghost in your Discord screaming YOLO again. Tapped out twice, reloaded with rent. Amen. Got shots tattooed where the faith should be. Ain't a traitor, I'm a cultist bleeding P and L in 3D. Half awake, caffeine shakes, click reload on doom. Portfolio redder than a meth head's room. You pray to Powell, I pray for pain, cause losing it all's the only way I feel sane. Broke the mouse mid-range, no hedge inside. I'm a leveraged lunatic chasing that spike. Yeah, that spike, that sweet, that spike. You wanted what? We wanted blood. You called it luck. We call it flood. This ain't investing, it's ritual math where gods wear suits and laugh. You call it a deal, I call it a burial. You're charting hope, I'm writing memorials. I'm not bearish, I'm biblical, saint of the stop-loss, prophet of the cynical. Your calls expired, your guy retired. I'm the reason volatility got inspired. Ooh, pretty red, baby, pretty loud. I'm the margin messiah of this crowd. I scalped dopamine, mainline regret. Shorted my soul, still paying the debt. Taxman smiling, brokers drunk. I hedge with chaos, portfolio junk. Your teddy eye looks like K-bar trash. My trend line's blood, my alpha's ash. I don't diversify, amplify pain. I'm the ticker whisperer, born insane. You want discipline? Try waking up to your broker on red. You want faith? Try watching your forever stock turn undead. You want hope? Sell it. Options expire on emotion. The only green left is envy emotion. Envy emotion. Envy emotion. Leverage high, redemption low. Crash that chart, enjoy the show. Diamond hands now, callous bones. Ticker gods, take these loans. You call it a dip, I call it a burial. You're charting hope, I'm writing memorials. I'm not bearish, I'm biblical, saint of the stop-loss, prophet of the cynical.
Oh, brother, oh, brother, oh, brother. Welcome back to the number one live trading show in the entire galaxy. Previously, we were just the best live trading show, I suppose, in the Milky Way, but the recent ratings have come in, and even though they're not yet really verified because we're not at the end of the calendar year, the odds are looking good for us to finally take that galaxy number one, numero uno spot. Welcome back to another episode of the Matt Kohrs Show, where I'm Matt, your Kohrs, and together we're going to see what the world's largest casino has in store for us today. And very quickly, a round of applause for our producer. What a song. What a song. Here I was going to be a negative Nelly talking about the pre-market sell-off, but that song got me going. It really did get me going. Is my hair perfect? No, but maybe by the end of the stream, we're going to get it there. Folks, I hope you're having a good one. I hope you had a good bullish day yesterday. Gap up, a pump, a little bit of a sell-off, and then a strong pump into market close. Right now, yeah, there's a little bit of question marks of what's going on, but if you ask me, it's coming back to the market wanting to test 6,800, so we are going to be looking at that. So, of course, I have the full breakdown for you today. We're going to be talking about the government shutdown, the Senate passage, it's going on to the House, and it looks like the government might be reopened by this weekend. We have a little bit of an update on trade deals, specifically with the U.S. and Switzerland, so I want to chit-chat a little bit about that. Of course, I could remind you of seasonality and the upcoming macroeconomic events for the week. We have some earnings to talk about, Rigetti, CoreWeave. We have some big news related to Nvidia, and in reality, it's that Nvidia news is the real impetus to why the market is selling off this morning. We're going to break down the levels, the key upside levels, the key downside levels, the neutral transitional target or transitional zone that you might want to be targeting. So we're going to get that out of the way for the market. And then by that time, the market should go dingity ding, ding, ding. And then we're going to be ripping it. Then we're just going to be absolutely ripping it. Doing the no shave there, no, Mateo? No, it's called laziness. And I've actually already shaved a couple times in November. And at this point, I can't even say, yeah, guys, this is just because I'm doing some larger cause. No, unfortunately, it is pure laziness. We did post a video yesterday that I want to talk a little bit about of Apex denying me. It's prompting a lot of questions, so I figure sometimes in the open forum like this, it might be easier to answer some of those, so I'm going to save a little bit of time for that. Speaking of that, Apex, they have a day and a half left on their deal, so if you want an Apex account, if you're trying to get those across the finish line and get the very cheap PA fee, this is probably your time to do that. Piper's having a great morning. I got to play a lot with her. I'm rewatching Stranger Things. I'm getting ready for the sailing skill to get released on old school RuneScape. I've decided that turtles should not be real animals. They confuse me quite a bit, and I think we should look into whoever invented those because they just seem out of place, and so do jellyfish. But we might not have enough time on this show to really dive into that. So that's pretty much the plan. That's what's going on in my life. Shout out to Tom from MySpace. And with all that being said, let me do my job and get you guys ready for the world's largest casino to go dingity ding ding ding. Stock futures are little change after a big rally in prior session. Tech shares under pressure. I have a feeling the intern at CNBC didn't update this. Yeah, right there. They tick lower. So right here, S&P 500, we are below the closing value. The Q's taking a little bit of a larger hit, once again below the closing value. So we're still within the range. It's not like we are gapping down red. Bitcoin's having a little bit of a downward pressure, went from 106 early this morning down to 104. The Russell, once again, halfway through the range. So the SPY holding up the best, the Russell and the tech sector taking a little bit of a hit, and Bitcoin a bit of a breather. And just to look at volatility, right here, just chilling sub 18. The fact that the market is down, but vol is still coming down here tells me that eventually I believe the dip's going to be bought, throwing out a prediction. And remember, don't trade on predictions. It's all about risk to reward. But really, I mean, we're not even testing 6,800 in pre-market. We're right in between this positive and negative gamma zone. Obviously, there is a big positive gamma zone at a node, I should say, at 6,800, a large bar here. So if we were to dip there, if we start to bounce off of it, so basically I'm saying, okay, if there's a little bit of a morning or early afternoon puke, and then we see that V-shape set up and we can identify a low risk entry to try to play the pop, I think that's something that really we should be considering today. Other than that, I'm looking for the breakout of 6,830, which is roughly around yesterday's high. And then from there, we're talking about 6,850. So I will remind you guys of all of that. But remember, yesterday, if you're looking at the daily chart relative to Friday, big gap up. We came down a little bit and then ended up rallying pretty much to this overall trend line. And all of that was basically because of the optimism surrounding the government reopening. The Senate passes measure to end the government shutdown. Package now goes to the House, and Trump has said he supports it. So remember, a little bit of a civics lesson. The way things work here in the U.S. is one of the chambers is going to be passing it, whether it's the House or the Senate. Then it goes to the other one. And if they pass it, it then goes to the president to get signed into law. And of course, at any of those stages, it could get denied, any three of those. But the fact that the president has already said he supports it, the Senate has already passed it, it means there's only one more domino that needs to fall in this particular circumstance. And it's the House. And if you look at the House and who's controlling what, probably a pretty good chance that it actually gets through this week. Senate passes bill to end the government shutdown, sending it to the House. The Senate passed a bill to end the U.S. government shutdown. I know I'm speaking at a million miles per hour. It's not you. Your brain is not foggy this morning. Yes, you've had enough coffee. I just have a lot to get to, so I'm going to speak at 2x speed. So if you don't like it, I don't know, tough tits. House Speaker Mike Johnson called for the House members to travel to Washington so they can vote as soon as possible on the deal. I find it crazy that in the middle of this government shutdown, a lot of our actual elected officials are just not working. And they're like, hey, call me back when you need me, honey. I feel like they should have been there negotiating, wheeling and dealing, and ready for any vote. The fact that they have to be called back to do their job, I don't know. Politicians, that being a job and what it was originally and what it transformed into now, it blows my mind. I kind of have no respect for politicians. Anyway, to end the shutdown, the House needs to pass the Senate bill, and then the President, Donald Trump, must sign it into law. But once again, the President has already said he does support it. Here's what Bloomberg had to say on it. U.S. shutdown nears end as Senate passes the deal. House readies the vote.
The Senate passing legislation to end the government shutdown with support from a handful of Democrats. The bill now heading to the Republican-controlled House. Joining us now is Bloomberg's Mike Shepard. Shep, just walk us through the progress we've made in the last 24 hours and the sequence of things over the next 24.
Well, we saw the Senate reach a breakthrough last night, John, with the chamber voting 60-40 to pass this interim spending measure that'll keep most of the government open at least through January 30th. And then we saw as part of that 8 moderate Democrats conceding, in essence, joining Republicans in passing this measure. And that concession really infuriated members across the party and really raised questions, as you heard from Hakeem Jeffries, about where they would go from here. But as far as this bill is concerned, it is now in the hands of the U.S. House. They expect to vote sometime tomorrow. The exact timing of when they would take it up is unclear, but Mike Johnson is expecting it to pass. President Donald Trump has signaled his support for it and is expected to sign it as soon as it hits his desk. Republicans, as you heard from Mike Johnson, are trying to cast this as a victory. They are saying that they prevailed, holding out against the Democratic holdouts and looking at it as a victory. Meanwhile, for Democrats, they're regrouping now and trying to figure out how to rebound from this loss. Now, the question of timing, John, is an interesting one because House members have not been in Washington really since the end of September. They took their last vote on September 19th, and they have to get back to town. And part of their return...
Quick timeout. Have not been there since late September. Folks, we are halfway through November. In what world does this make sense? I mean, these people are making multiple 6 figures. They are wheeling and dealing some insider trading like no other. And they can't even put on the act of like, hey, I know the government shut down, but I'm still going to do my job. We all know it's performative. We all know it's theater, but like, at least try to tell us that it's rain when they're pissing on us. I feel like just it's in our face. They're like, no, we are actually legitimately pissing on you. Like, give us a little bit of bedside manner. I just don't get it. I just don't get it, folks.
Could be impeded by some of the disruption to air travel that we have seen caused by the shutdown. So we'll have to watch that as a question of timing. And another thing we're going to have to watch is, as I said, not all of the government will be funded through the end of the fiscal year in September. Most of it, in fact, is only funded through January 30th. And that tees us up for another potential showdown over spending as soon as we get into the new year, John.
So basically, they're trying to say, hey, for a temporary period, really the end of January, let's get things rocking again, because right now people aren't getting their food benefits, they're not getting their healthcare benefits. Obviously, air traffic, if you've been flying recently, it's an absolute nightmare. I believe things such as national parks are still shut down, so please correct me if I'm wrong on that one. But just a lot of the basic government things, because it's so long, we're seeing real repercussions. But anyway, I find one of the truest ways to find out if something is happening or not versus just headlines is actually looking at the odds markets. And right now you can see that we're actually increased even further. We're now at 95% chance that by November 15th, we will be opening. Somewhere between the 12th and the 15th, according to Polymarket, we will be opening, which is telling me that it's pretty much a done deal. And even looking at call sheet, this is the first time that we've really just went flat. I mean, I feel for weeks and weeks when I kept showing you the call sheet numbers, the bet debt went up and up and up and up and up, and it just kept climbing. Over the past week, it flatlined, and now it's pretty much just steady somewhere between 42 and 45 days, and really 42 and 44. So we're basically looking at this week. We are looking at this week somewhere, hopefully by Friday, especially if you have to travel anytime soon. So looking at just the headlines, that's one thing. And yeah, you might be able to discern what's real and what's not. But then when we dive into the betting market, and this is kind of cool, you can actually see the bets coming in real time, that, yeah, they're even confident that the government is about to open up, which leads to the question of, okay, what's it going to do the market? I want to talk about that, but I do have one more important question first. Progressives blame Schumer after shutdown strategy collapses. Senate Democrat leader tried to keep colleagues in line as party sought enhanced ACA subsidies. My question to you is, do you believe that the Democrats who quote unquote defected, they split with their party lines? Do you believe that they did the right thing, or do you believe that they did the wrong thing? Because the one argument is Schumer's argument right here, and people are calling this the Schumer shutdown of like, hang on, these ACA subsidies, we didn't get a guarantee, so how are we going to be able to help individual states with their slush funds to give healthcare to illegal immigrants, which it's not widespread. It is happening. If you look in the state of New York, California, and Illinois, I believe there is one more state, but it's one of those things that it's not a widespread issue as in all 50 states are doing, but it's also not on the other side that it's not happening at all. I'm just trying to get some actual information across here. It's interesting to me that is potentially being put as a higher moral obligation from the Democrats versus all the people in the country right now who need something as basic as food benefits, such as the SNAP program or what's going on with EBT and all that stuff. So it's interesting to me of where we're putting certain moral obligations. But anyway, clearly, there was, I believe, 8 Democrats who split with the line and said, hey, actually, we're going to help with the government getting reopened. And they did that basically on the handshake deal that we're going to be able to discuss. And when I say we, I say the 8 Democrats, or really the entire Democratic Party, will be able to discuss what's going on with the ACAs in a separate bill with the Republicans. But it's more of like, okay, we'll take this issue. We're going to table it for right now. We'll ideally be coming back to it very quickly. But in the meantime, let's get the government reopened because it's causing issues elsewhere. And obviously on many, many different levels, it's straining the system. So with all of that in mind, like trying to break down both sides of the story, and I'm not telling you which side to be on, I'm just kind of curious about where your thoughts are at with this. Do you think that the Democrats who broke with party lines did the right thing, or do you think that they did the wrong thing? TrekSpot, 13 minutes. Facts, Tom. Truth, Tom. What did Tom say that everyone's lighting him up? I will say the Jews would do that. Jesus, Tom. I don't know how much time to be on chat every day. Bubbles. Lots of red pills dispensed due to the something shutdown. Will those loans be provided by food banks? Not sure what you're talking about. They did the right thing. What Turf said. What did Turf said? Lots of red pills dispensed due to the shutdown. What's a shutdown? I think they did what they were. Allowed to do. Well, Schumer. Well, of course they're allowed to vote however they want to vote, but Schumer's obviously like pretty pissed off about this. Right thing for the accounts. LOL. Wrong. Sorry. Keep it shut down until the employment rate drops. They are all against us. They all suck a bunch of ass. They suck ass. All right, a lot of interesting hot takes we have early this morning. Always a viable lesson to turn it over to you guys to see what's going on. Legal or not, if someone in America needs food, shelter, and healthcare, they should receive it. Our tax dollars get wasted on much worse. I see what you're saying, and I can't speak for the opposite side's opinion, but I think the argument is if we're going to spend money, what about on other things that we have? I at least from some of the arguments I hear in New York, which is just the closest thing that maybe I could reiterate the argument, is why would we be giving tax dollars on a state level to illegal immigrants before we help out our own? It's not really difficult at all here in New York to walk around and find a homeless person who maybe is a vet or something like that. I think the argument in a certain sense, and not exclusively, but I think in a certain sense, it boils down to maybe before helping outsiders and others, we should be helping our own. Once again, I don't know. Like, that's just what I'm hearing. I'm just literally exclusively regurgitating some of the arguments I'm hearing. It's not that we shouldn't be helping. Obviously, in my own opinion, as the world's most powerful, most influential country, we should be helping. I mean, why would you not be doing that as the most powerful, most influential? I think a lot of the discussion comes down to who we're helping and seemingly the priority list of who we're helping, which really ties back to today. Obviously, happy Veterans Day to everyone, which I should remind you, obviously the market is open today, even though it is a holiday, it is a bank holiday, and the bond market is closed today. Obviously, the stock market's open, the options market is open, the futures market is open, the crypto market, all markets are open, but the bond market. So actually, the fact that it is Veterans Day kind of brings the current conversation to a very important point. And I believe, and I don't know, maybe some people, whether you're extremely right here on YouTube or if you're a MAGA here on Rumble, please correct me if I'm wrong. I'm not trying to misstate the discussion, but I think it does boil around the idea of, no, I don't think anyone is necessarily against assisting and helping, especially when we talk about our billionaire elites, especially when we talk about how powerful our country is. I think the issue is the priority list in which we decide who to help first. And I believe that there's this overarching feeling that in the United States, our tax dollars are going to particular groups of people that clearly, based on the last presidential election, if you look at the popular vote, believe that there are people being put higher on the priority list than they should be relative to something such as, literally, I could walk outside right now and not only could I easily find 25 homeless people, but there's a good chance that statistically a lot of them are vets. I'm not saying the large majority, but when you look at how our vets in the United States are treated, some of them are like truly heart-wrenching stories. People who need extreme amounts of assistance, and it seems as even though they dedicated whatever time and effort and particularly limbs and mental health to our country, the country has turned their back on them. So I believe that has a lot to do with it. I believe, and obviously maybe you view it from a different vantage point, and I would love to hear from you, but that's a lot of the rhetoric that I hear here in like the city, at least. And maybe the discussion is different elsewhere, depending on where you are in the globe, depending on where you are in the US. But just to reiterate to the best of my ability of like what I'm hearing here in New York City, that's what's going on. So we'll see. Matt, did you happen to notice the national debt speed way up during the shutdown? Well, yeah. Well, it depends. Are you looking at it just in dollar value, or are you looking at it in like percentage? Obviously, we're just going to be continually increasing at an exponential rate because we're debasing our dollar. So that makes sense. It's not going to be linear when the thing that you're basing it in is always getting devalued time and time again. But this idea, we're always going to have debt. We are in an economic system that is a forever expanding credit system. In a weird way, and like people don't get into the nuances of this discussion, the goal is to not get rid of our debt. It's to fix our deficit. And I know that those are sometimes used interchangeably, but when they're used interchangeably, that's actually wrong. You shouldn't be doing that. It would actually cause a lot of, I know this sounds crazy, but it's referred to as a debt spiral. If we were to pay off all of our debt, that would actually kind of be a bad thing. The better thing to focus on from an economic perspective, a healthier economy, a healthier government, is actually having a positive deficit rather than a negative deficit. Once again, I know debt and deficit are used interchangeably. They should not. What we should really be focusing on is improving the deficit, not necessarily the debt. By a secondary, tertiary effect, you might help improve the debt, which is good, but really the major focus should be the deficit. But anyway, we're getting a little bit off point. Just to kind of wrap up the larger picture, U.S. and Switzerland working on a deal to slash 39% tariffs. So right there, I know recently we talked a little bit about Japan, mostly about China, but I just want to let you know this concept of the trade war, even though it's still a thing, it's getting a lot less notoriety, a lot less headlines. It is still going on in the background, but a little bit of positive news there with Switzerland. Bringing it back to individual companies, we're still in earnings season. Most of the S&P 500's already reported. 80% of companies have beat earnings. So right now, this particular earnings season is favoring the bulls. Rigetti, they didn't do so well. CoreWeave, they they didn't do so well. At least the market is not reacting well. Bringing it to this morning, well, just so you know, after the market closes today, Oklo, I know a lot of you are paying attention to Oklo. Big Bear AI, they ended up beating, I believe. Well, at least the market is green looking at that reaction. And there was one more that I saw. So we'll go over this, but in terms of individual equities, that is not the biggest news. CoreWeave stock slides on weak guidance, even as revenue more than doubles. So CoreWeave down, Rigetti down, Big Bear AI is up. But the big individual news this morning relates to the biggest stock of them all, Nvidia. SoftBank sells its Nvidia stake for $5.8 billion. Japanese tech investor reports surge in quarterly profits driven by gains from its big investment in the ChatGPT maker. So this news coming out is part of the reason why the tech sector is having a little bit of an issue this morning. It's because of SoftBank, Mayoshi-san, I believe is how you say it, Nvidia going from 200 all the way down to 195. So remember, with every buyer, there is a seller. So even though they sold $5.8 billion worth of Nvidia, that also simultaneously means that someone bought $5.8 billion worth of Nvidia. Remember, you don't sell into the ether, you don't buy from the ether. Every single transaction has a counterparty. And I think sometimes when it comes to financial reporting, there are skews. And right now, that is a little bit dramatic sounding. Yeah, oh my God, they sold their entire stake, $5.8 billion Nvidia sold. But from a math perspective, from a market perspective, it's as fair to say SoftBank unloads and people quickly buy $5.8 billion worth of Nvidia. Those are both truthful statements. Those are both truthful headlines. Now, that the reason that this is driving it down is the emotional sentiment, the psychology impact of people saying, okay, well, why are they selling? They perceive SoftBank to have better information, better resources, better market callouts. So if they're getting out of the position, the question is why? But once again, on the other side, we could argue maybe the people who bought it off them, I don't know if it was one player or a group of players or if it was just the general large market, what if they're more informed and more accurate and have better call outs than SoftBank? So it kind of, the sword, it does cut both ways. And I do want to remind you, has SoftBank made really good calls in the past? Yes, but they've also made devastatingly horrible calls in the past, such as WeWork. So this isn't necessarily the end-all, be-all, like bellwether for the stock market. But I do want to let you know the overall tech sector, aka the Nasdaq, is down this morning because Nvidia is down this morning, and Nvidia is most likely down this morning because of this news. But if you ask me, it is an overreaction to the particular news. SoftBank sells its entire stake in Nvidia for $5.83 billion. SoftBank sold 32.1 million shares of Nvidia in October, and it also sold part of its T-Mobile stake. This is not the first time SoftBank has cashed out of a chip maker. Despite the sale, SoftBank remains tied to Nvidia through its other AI ventures. So it could be something as run-of-the-mill as ARK Invest, where like, hey, one position is worth too much of our portfolio and we have to balance it out. It could be as extreme as they have horrible news and think Nvidia is about to get clocked, or the truth could be somewhere in the middle. But I want to make this very clear. The fact that they sold $5.83 billion, and that is a headline, you could say market just buys entire stake of 5.83. If someone is selling $6 billion, that means someone is buying $6 billion. There always has to be a counterparty. So if you ask me, I believe this is an overreaction in the short term. And I think as quickly as today, but maybe a little bit later this week, or maybe going into the earnings next week. Remember, they're reporting on November 19th, mid next week. It's probably going to be very, very quickly forgotten. So just want to throw that out to everyone. If you haven't already, sign up for the newsletter, mattkohrs.locals.com. My mod will drop it in chat. It's in the description of the video. Every single Sunday, you will get this email. It is 100% free. You've never had to pay for it. You never will have to pay for it. I break down what's going on in the market. Quick little cheat sheet of earnings. Obviously, tomorrow you might want to pay attention to Circle. Cisco's probably going to be an important one. Walt Disney is also going to be an important one. That's on Thursday. And that's probably going to really be wrapping it up for the week. And then it's next week where we hear from Nvidia. I give you a cheat sheet as well of all the major macroeconomic events. There's nothing really scheduled today. The bond market's closed. All other markets are open. It is Veterans Day. Happy Veterans Day to everyone. Tomorrow, we have a 10-year note auction. Thursday, we might be getting the CPI report if the market opens in time, or not the market, excuse me, if the government opens in time. Same thing with initial jobless claims, same thing with the PPI report, and same thing with the retail sales. So depending on when the government opens, the remainder of this week obviously could be a very exciting one. And even though the market just opened. I just want to let you know today the seasonality is bearish. It's actually strongly bearish. Is that the end all be all guarantee? Nope, but I do want to let you know that over the past 27 years worth of information, the bears have dominated this particular day. And on that note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right. We are off to the races, and as we are waiting to see what in the world is going on, I'm going to give you the key levels of the day, at least as I see it. So as I always do, I mark out the previous high, low, and close. That is the green, the red, and the white horizontal line. The white box is the transitional zone, as in choppy, bullish above, bearish below, choppy within. And then the final thing are the major open interest levels, as in where we see the big players positioned in the options market, at least as of the time that I drew these lines out, and obviously it is dynamic. So the bull case is this: we hold 815, we push 32, hit the closing value from yesterday, 50, 75, reach target 6,900. The bear case is we fail at either 15 or 32 and we test 800. If we don't hold 800, then I'm looking basically for 6,775. And if we don't hold that, I'm looking for 6,750. And if we don't hold that, I'm looking for the downside gap fill to 6,730. I believe I'm of the mindset that every single day it's good to have the bull case and the bear case. We're right in the middle of the transition zone. So I'm going to personally be kind of waiting for that. Do we break to the positive side or to the negative side of the transition zone? But remember, coming in with an absurd bias where you're not even taking in data to say, hey, maybe your bias is wrong, I just think that's a poor way to interact with the market. So once again, this is what I'm watching: bullish above, bearish below. These are all my key levels. Obviously, we will be watching the flow throughout the day to see, is the overall market in terms of the options market, is it bullish, is it bearish? Because trading with trend is going to make your life a whole lot simpler. So we're going to be watching this throughout the day. We really just don't have that much data yet, but feel free to screenshot these. Feel free to write these levels down. Feel free to use them. Feel free to not use them. I don't know. I'm not your mom. You can do whatever you want. I'm just letting you know these are the levels that I'm personally using. And then obviously right here, if you're trading Apex or NQ in general, I like to mark out the overnight session high and low, just because when I did some studies on it, you find out that the high and the low of the overnight session is broken in I think it's 85, 88% of the time. So I'm going to be looking for us to either go up to 25769 or all the way down to 25572. Obviously, we are currently closer to the bottom, but I do want to let you know that the 10-minute is actually going from bullish, bearish, potentially pushing back to bullish right now. So I want to call that out. Obviously, SPX has the downside gap fill. If we look at NDX, it has both an upside and a downside gap fill. So we're currently in no man's land. Looking at gold, it did have a nice pump yesterday, following through a little bit this morning. Looking at the Russell small cap sector, holding the 50 EMA, there is a downside gap fill, but once again, no man's land. Bitcoin putting in a lower high right now. So if the bulls really want to get this going, they need to basically step in and start buying it before 100, 100, and 1,000. So watching that, remember James Wynn, that Twitter character, he has a large short position on right now. So we're going to see if he is right or if he is wrong. Overall, yesterday I did call out the fact that Palantir is looking phenomenally good. Save the 50 EMA. Yes, there's a downside gap fill, but there's also a large upside gap fill. If you look at the option structure, if this starts to push 190, 195, 200, this might have a beautiful Santa Claus rally. Nvidia, same thing, saved itself at the 50 EMA. Yes, there is a downside gap fill, but overall higher highs and higher lows. And the other one I called out in the update video that had a similar structure was Tesla. Saved itself at the 50 EMA. Obviously, low risk entry, and you're looking for the follow through off the higher low to see if there's any continuation. As I explained in the update video yesterday, this is not the end-all be-all list. It is not an exclusive list, but I do think right now Palantir, Nvidia, and Tesla, from an options perspective and from a price perspective and from a technical perspective and from a seasonality perspective, now that I'm thinking about it, are all worthwhile to be putting on your watch list. So if you can identify an opportunity to get in with low risk, I think it is maybe something that you should be looking at least throwing it on your watch list, to say the least. So As everyone in the Discord already knows, I think the name of the game today is not much different from yesterday. The battle of 6,800 is still on. Yesterday, obviously, we had a large gap up and a little bit of a dip and then a continuation. Clearly, we closed above it. So I would say that even though the battle's not over, the bull camp dealt some serious blows yesterday. The fact that we closed above 6,800, which I believe, according to the options market at least, a lot of people are using as their risk on indicator. Are we above 6,800? So the longer we can stay above 6,800, the better odds for the bulls, especially if we can get consecutive closes above 6,800. So to me, I am not just watching this because it's the bottom of the transition zone, but I'm watching it because to me, this is the main level that we're going to find out in the short term who is actually in control. And then obviously, if we can get above and close above 6,850, that means the bulls are dominantly in control. Now, is that a guarantee? God, no. If it was a guarantee, we'd all be making a lot of money and we could just be betting the farm. On the flip side, you have to consider what happens if we come back down below 15. Don't hold that. Don't hold 800. Well, that's where we get back into, on a swing perspective, the larger, choppier area of like, okay, what's going on? Now, bringing it to today specifically, the 5-minute was bearish on the S&P 500, pushing bullish right now. The 10-minute is testing. The 30-minute beautifully saved itself at 8 a.m. this morning. And then the 4-hour is holding bullish. So as of right now, questionably bullish, and bullish. Looking at the Nasdaq, the 5-minute is questionably bullish. The 10-minute is actively testing, but still bearish. And right here, the 30-minute is testing. So the 5-minute is trying to push. The 10 is testing. The 30 is testing. And actually, so is the 4-hour. So the S&P 500 on a relative basis is currently showing a bit more strength. It's trying to get all of these momentum clouds, these EMA clouds on the bullish side. Well, the Nasdaq is, the 5 is testing, but the 10 and the 30 are a little bit suspect. So if we can get a little bit of a lift off out of this, basically, if we can break out of this transition zone, if we can hold in the green as in above yesterday's closing value, then we'll be looking good. But before that, well, we should be looking at flow. The Mag 7 was dipping. We're catching a little bit of a pop right now. The SPY, same thing, was dipping a little bit, catching a bit of a pop right now. I do want to let you know that the bulls have returned to the market. Sorry, my big head was blocking this. But over here, you can see in the past 5 days, things have actually gone to the call skew. So you can see everything shifting to the right, which from an options perspective should favor the bulls a little bit more because people are getting back into calls after they were clearly overbought. And right now, people are paying way too much for meta calls, but that's a side point. Looking at volatility, hasn't changed the much from yesterday to today. The vol skew is pretty much the same. Looking at the overall opportunity, well, I actually think I could better show you in this. There's positive gamma above, there's negative gamma below. Remember, this, if we tilt below 6,800, things can get fast, as in price can move very, very rapidly, because remember, negative gamma is slippery price action, while positive gamma, the purple on your screen, is sticky price action. The price action up here can be defined as mean reverting, while the price action down here can be defined as trend following. So that is going to make it harder for the bulls today, and this is going to make it easier for the bears, but it seems to all revolve around the fact of, are we above or below 6,800? So similar to yesterday, that is my major watch. That is my major watch. LOL Matt's newsletter, time to buy this turkey. Hey, I thought that was a well-timed newsletter. I really did, because I called it out on Friday, and it looks like we should have bought this turkey. And then obviously I had a photo shoot with Piper, who is actually she moonlights as a high-level chef, and she whipped me up a turkey. But yeah, at least as of now, that call out of time to buy the turkey on Friday proved to be right. I mean, we're up 100 points from it. That's not too bad. Looks like that was a worthwhile turkey to buy. I mean, we're up about 1.4%. All right, so that's pretty much the rundown. I will be showing you the flow throughout the day. We're going to see how this is going. I do want to let you know that on Apex, the current deal, which you can get with code Goonie, will be ending in a day and a half. So code Goonie, 70% off. And then the PA fee, as in the upgraded fee from eval to performance, is dirt cheap right now. And you could take advantage of it for the next 2 training sessions with that code Goonie pinned to the top of chat in the description of the video. And on that note, I do want to show you my accounts. Unlike yesterday, I was a good boy this morning. I did not trade anything when I should should not have been trading it. So right here is all of my accounts. 15 of the accounts, top 5, they're all up $17,000, $18,000. And then the fresh new 5 accounts are all up about $1,000, obviously, for a net of 5. I also still have my funded futures network. That's the one that we're trading the 10-minute Orbo that's only trading with trends. So it's not just the 10-minute Orbo, it's the 10-minute Orbo, but only if it is the breakout is in the direction of the current trend. So that is this FFN account. My 15 Apex accounts, the big ones, as in big buffer, they have a large amount of buffer. Today is the last day. As long as I make one trade today and don't blow out my account, they should be looking pretty good. The FFN, the Orbo trade just went. Here it is. This is a fully automated system, and it actually almost got a fill right there. It just was a tick away. How did that not get a fill? What? Literally, the price went into where it should be getting a fill. I guess it was a slippage issue or a timing issue of getting it up there, but like legitimately, you could see price went beyond my fill level. So that's a little bit frustrating. And by a little bit, I mean a lot of it, because you could see price literally went to those 2 target levels. So that's a huge bummer. That is a huge bummer. He blows out his accounts like he does his pants. No, these accounts have actually now been around for, I guess at this point, a month, because it's 16 trading days, which is basically a calendar month. And granted, I haven't gotten a payout. And if you want to know why I haven't gotten a payout, I posted a video yesterday on the secondary channel. It's also up. But right here, Apex Trader denied me $30,000. Denied. It is up on Rumble, the normal channel. It's up on the backup, the extra YouTube channel. The link's right there if you want to find it. There's a lot of questions about this. It created more questions than I thought it would. But I just broke the MAE rule, the maximum adverse excursion. Basically, I had one trade that the unrealized drawdown of that trade, even though it didn't blow out the account, it was larger than 30%. And it was the second day that these accounts were live. I believe the first day I was trading the accounts back on October 21st, the very first day I traded them, I made like 2 or 3K in the account. The next day, I had a trade where the unrealized drawdown was 95% of my profit. And basically, that was it. That was the rule that I broke. So as I've explained to a lot of you, okay, that locked in another 195. This Orbo trade is comically simple. I don't think about it at all, and it's already up 2.1K. This one just keeps going and going and going. But anyway, as I've explained to all of you guys, this denial was not a surprise. I knew I broke the rule. I did it. I saw the trade. And at the point, I didn't mind breaking the rule, because if you break the rule, they just deny the payout for that cycle, and they just make you trade another cycle. They don't take your profits. They don't take your accounts. They don't do anything like that. They just say, hey, trade for another 8 days and do another payout request. So as I told you guys going into the request, I knew it was going to get denied. And in this video, I explained my new trading strategy that has basically made me all this money. And then I also somewhat explained the rule of why I got denied. So I want to be very clear with Apex. I knew it was going to happen. I knew I broke the rule, but more important than that is they do not take your profits and they do not take your accounts. They simply say, hey, okay, we're denying this payout. Go trade for another 8 days. And if you trade well in those 8 days, we'll then do it. If you made 2 to 3K your first day and you are withdrawing 2K, isn't that breaking the 30% consistency rule as well? How? What does your payout amount have to do with that consistency rule? There's a lot of confusion about what these rules are and aren't, and I have a full breakdown on those. Like a full, there's a lot of examples. If you watch it here, actually, if you come to this video, and then it's all tagged in the description right here. Apex Trader rules fully explained. Apex Trader worst rule fully explained. How to pass Apex evaluation in 1 day. These 3 videos, even though they're not 100% of everything you need to know, if you watch these 3 videos, which are posted in this, whatever, you can find it on my Twitter. It's right in there. It's in the description. They explain it. But someone, that question, that has nothing to do with it. I thought it was 30% consistency of what your payout request is. No, not at all. That's what I'm saying is people make weird assumptions about what these rules are and aren't, but you could just, it's all in the FAQ. And if the FAQ, if you find it confusing, I have multiple videos breaking down exactly what all these rules are. Like literally like painstaking just examples. And by the time you watch those videos, if you still don't understand the rules after watching those videos, maybe trading's just not for you. Like at a certain point, if you read the FAQ and watch those videos and have gone through some of the trading yourself, if you've done all three of those steps and you're still confused about the rules, at a certain point, you just have to consider if it's not for you. Like you legitimately do. If you've gone through all of that, traded yourself, read the FAQ, and watched breakdown videos explaining it, then it's just not for you. Take profit trader is way better. None of the rules stuff like Apex, just a preference. There's pros and cons to both, and that's why I use both. Actually, I use three. I use Take Profit, I use Apex, and I use Funded Futures Networks. They're similar, but there are nuances to the rules. So the way I do it is basically because none of these programs and platforms are perfect, basically, I take advantage of all the pros on across the firms. So the three firms I currently support for futures, and I'm saying that because I use Vanquish for options, but the three firms that I support for futures are Apex, Take Profit Trader, and Funded Futures Network. And the reason I use those three together, well, first of all, based on all the current information I have, I trust them, they're making payouts, and obviously that changes. Sometimes companies go from good to bad, and if something starts to happen and I don't like it, well, I have no loyalty to any of these. I have loyalty to growing my own bank account. So if things start to change, I will let you know. But at this moment in time, those are the three I use based on, I think they have a reasonable, acceptable set of rules. And even though it's not the same on all three firms, I use accounts on all three firms to take advantage of the pros and ideally try to, I guess, the cons, I try to move on with my life. But remember, you can use multiple firms. Like once you use a firm, it's not like that you're forced to use that for the remainder of your trading career. So for example, on Apex, if you're trading well, you can get a lot more money than you can on Take Profit Trader, and it takes less of a percentage cut. However, it's harder to get those payouts. So that's the risk reward. You can get a lot more money. There's a lot more potential, but it's harder to do it. On Take Profit Trader, it's harder to pass the account or the test, the eval, but when you do, you can start to get payouts every single day. When you do that, that's awesome. Funded Futures Network, they're a little bit newer, so they offer crazy good deals to try to get these accounts, and they're kind of in the middle of Apex and Take Profit Trader in terms of the ease and also in terms of like the potential of getting these payouts. Like I said, they're in the middle. So to me, it's a gradient, and you're using them all together and trying to use them all to balance each other out, in my opinion. At least that's how I approach it. And maybe you agree with that, maybe you don't. But I don't think that anyone should be thinking that one is the end all be all best. There are clearly ones that are absolutely fucking horrible that I don't think any should be touching because they have had credible accusations of not paying people out, or they have a rule set that's so incredibly bad, such as the daily drawdown limit. I'm telling you folks, if you are using a firm that employs a daily drawdown rule, you should run and as fast and as far as you possibly can. Daily drawdown rules are the biggest, like mathematically, they are the most scummy rules that they could possibly be using against traders. So I specifically do not use any firms that have daily drawdown limits because it's one thing to have already a drawdown limit, but when you have daily drawdown limits, like I'm telling you, like I've run all the math, I've modeled it all out. The only reason that rule is in place, as in, it's one thing if you self-impose it, but if the firm itself is imposing it on you, they only do that to fuck you over. I am promising you this. There's no ifs, ands, or buts. There's no middle ground of the math discussion. When you look at the math of daily drawdown limits as a rule, once again, not self-imposed. I'm saying it's imposed on you from this, like the firm itself, the prop firm itself. It is only there to cause you problems and to increase your chances of blowing out. I promise you this. And anyone who would argue otherwise simply is either being paid to lie to you, they're too stupid to understand the math, or they've never looked into the math themselves. But for me, the way I've structured all my affiliate deals is I can say whatever I want, whenever I want. I don't have to say anything positive or negative. That is not required of me. I have the ability to run the math. I've looked into the math, and I'm here to tell you that the daily drawdown limit rules are exclusively there to fuck you over. Why don't you try Top Step? I've looked at Top Step, and I believe first of all, Top Step I have issues with for various reasons. The whole Project X thing is really fucking scummy. They're basically trying to get all of the prop firm space to work together and give you information on a trader from a different prop firm. They were pushing this. Top Step, for me, various reasons, I will not use them. Various reasons. And another one is, depending on what platform you're using with Top Step, they have the daily limit, which is also fucking scummy. And then by the time you look at the coaches, the quote unquote coaches, they're all fucking dipshits. They're all dipshits. They have no idea what they're talking about. The only thing that is guaranteed in this world, I suppose, is death, taxes, and the quote-unquote coaches on Top Step losing money. And does no one find an issue with that? So people who are working for the company, surprisingly, they're all horrible traders teaching people how to trade, and then yet they make money off their affiliate deals, which you have to then use more of when you blow out. Like, it's all... They're scumbags, dude. They're absolute scumbags. Passed on Top Step, started with Apex. Passing any of these tests is not a difficult thing. The difficult thing is in a performance account, following that firm's set of rules and getting to the point of payouts. And a lot of it, in my opinion, at least from a math perspective, comes to can you get a little bit of a lucky streak going to build out your buffer? Because as soon as you have a buffer going, that's when life becomes a lot easier. A lot easier. But I want to make it clear, you should not have allegiance to any of these. That would be like having an allegiance to a casino. Think about that. How silly would that be if you were in Vegas and you're like, no, this casino loves me. No, they're all trying to take your money and you're all trying to take their money. I think there needs to be a lot more honesty in this particular space. I like this space, but I still think that there should be more honesty. This idea of all these firms parading around and saying, hey, we're trying to help traders become better. We're trying to partner with the best traders so you could become better and we could become better and we could all hold hands and sing Kumbaya. That's a bullshit lie. It is a bold-faced lie. They're trying to take your money and you're trying to take their money. It is no different than a casino. Yeah, you can doll it up as much as you want. You can throw some makeup and lipstick on that pig, but at the end of the day, you're making out with a hog. Like, that's what it is. And I hate the fact that they try to market it as if we're all on the same team. It does matter. It does not matter where you are trading. You are trying to take their money and they are trying to take your money. It's honestly that simple. And I see almost like this like Stockholm like relationship brewing with some of these people where they're like, no, I got to be loyal to this one. No, I'm telling you this straight up. Use the firm where you have the best opportunity of making a profit. Do not use the firms where you do not have the best opportunity of making money. You are doing this to make money. It's that simple. It is honestly that fucking simple. And the fact that people are like, oh, I'm loyal to this guy, and like there's like drama and emotion and this and that. Folks, it's a game of math. If you're at a casino, are you going to play the slots where you have higher or worse odds? No, you go to the casino where you have higher odds. If a different casino starts to change their slots and they have a better offering, maybe take advantage of that. If you think some are equivalent, take advantage of that. But obviously, it would be downright retarded for you to go to the one where you have shitty odds. And right now, I am using the ones where with the way I approach the market and my trading methodology, specifically Icarus, but also a little bit of that 10-minute Orbo. Right now, I perceive my best chances of being profitable to be on Apex, Take Profit Trader, and Funded Futures Network. That could change in the future. It's changed in the past, and I have no guarantees that it's going to stay stagnant in the future. In fact, it probably will change in the future. But as of this moment, as of November 11th, that's what's going on. That's what's going on. Imperial Trading Funding for options. I have no fucking clue who they are. The only one that I trust for options, once again, at this moment in time, is Vanquish Trader. All the other ones, I hear really, really scummy things happening in the options world for sim defunded, and same thing with the Forex world. In fact, I've heard such crazy things in the Forex sim defunded world that I won't even use one. I think in the entire world of trading, Forex is the biggest fucking scam we currently have going. And it's not because that market in itself is like more difficult, this, that, the other thing. It seems like a lot of the players in this space are like surprisingly scummy. And then on top of that, why is the SPY popping and then the Qs aren't? But a lot of the brokerages have like, and the CFDs or whatever they are, they've just stolen people's money. They disappear. They're all headquartered in some random island. I think you have a lot less protection trading Forex, especially through the world of sim defunded. These Forex sim defunded are seemingly really, really sketchy compared to the others. Like, I think Forex is very, very scummy. And I think that's reflected in a lot of the quote unquote content creators who are also trying to be content creators within that space. I mean, I feel like I can't go a month without someone getting exposed for like legitimately stealing from their audience on like all these fucking weird ass things. Why does your cat scratch you in the face, yet you complain when stock move upward? What could that mean? Why does your cat scratch you in the face, yet you complain when the stock move upward? There's no way that's a lot. Like hang on. All right, I got to read this one more time, and I'm going to go really slow because maybe it's my brain. Why does your cat scratch you in the face, yet you complain when stock move upward? What the fuck does that pause? All right. I know I was going to say one more time, but maybe one more extra time. Why does your cat scratch you in the face, yet you complain when stock move upward? Fuck, man, dude. I think my brain's breaking. That doesn't make sense. There's no way. Why does your cat scratch you in the face when you complain when stock move upward, yet you complain? Yeah, what the fuck, man? Like, what? What, man? No, yeah, it's a deep riddle. Is it a riddle? Riddle me this. Yoda once says, why does your cat scratch you in the face, yet you complain when stock move upward? What, dude? I'm going to be thinking about that one all day. I now have like a stim that I'll be reiterating in my head all day just to get to the bottom of that one. I'm going to spend hours today thinking about that riddle. It sounds like a Kamala comment. What? Dude, we're going to get to the bottom of that. That question needs answers. All right, we were dipping 10 minutes back to testing. This is the major thing I'll be watching this morning, the 10 and the 30 on NQ, because the S&P 500 is telling us bullish, 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 bullish. So, okay, S&P 500 looking good. NASDAQ, potentially conflicting signals. The 5 is trying to be bullish. The 10 keeps getting smacked here. So basically watch 630. That's where the 50 EMA is on the 10 minute, and we have this shelf at 20. So I want to see this push and hold above between 620 and 630 if it could get above this. Because if that starts to go, well, then the 30 minute could actually get bullish, and the 4 hour could ideally hold bullish. So this is really the setup I'm watching. The Mag 7 was looking good, got clapped between 945 and 950, and we're not seeing that recovery yet. But on the flip side, even though the SPY got clapped, it actually did get a nice bounce. So we're kind of seeing the opposite of what we saw yesterday. Yesterday, for the first half of the day, the SPY was weak and the Mag 7 was keeping us alive. And now, like I said, today it's the inverse. The Mag 7 is showing weakness, and yet the S&P 500 on a relative basis is showing a bit of strength. So watch this flow, obviously incredibly important. Let's zoom in here. Okay, new play. It looks like there's a giant put credit spread now in play. Wow, my big head is blocking this. My apologies. Let me move myself over here. 6,770, large put credit spread, a PCS, put credit spread. That is a neutral to bullish bet. This bet is basically to the tune of 12,000 contracts saying that we will end the day somewhere above 6,770. Doesn't matter if it's by a cent, doesn't matter if it's by $100. This particular bet, when you see this structure, they are betting that we end somewhere above it. It could be by a little bit, it could be by a lot of bit, but that's what this particular bet is. And it's adding a little bit of positive gamma. You can see this positive gamma node. It's adding a little bit of positive gamma to the system, giving us a potential support below 6,800. So even though we have negative gamma here, if it were to test and break, you might catch yourself right at that. So just want to call that out to everyone. That is a new position as of market open that did not exist before market open, but they made it pretty much right at market open. And we are pushing right back into this positive gamma zone. I've already laid out these levels, but if you're late to class, the first test would be the closing value from yesterday, the red to green test. That's always a very popular play. It's not as popular as the downside gap fill, the upside gap fill, but it's still very, very popular to play into the previous day's closing value. So we got close there. We bounced off of 15 for the second, third time. I'd be looking at 32.42, exactly that closing value. And then obviously from there, I'm looking at 40.41 if we can hold this. However, really, well, the Qs did get a bit of a pop. I mean, it's just going to come back to this. Can the 5-minute hold green? Can the 10-minute push green? Can the 30-minute push green? Like, we're right. The Nasdaq is a little bit questionable right now. So I think we just need to have patience and wait to see which way it breaks. We don't have to rush a trade. Remember, mathematically, it is far more impactful to have a bad trade you should have never been in rather than a good trade you missed out on. Those are not equal and opposite. They are opposite, but the impact of having a bad trade you shouldn't have been in is far worse than the positive impact of like getting into a trade and maybe it did go or not. Remember, it's skewed in terms of impact on your account. Whether you're making or losing the exact same amount, the losing that same amount has a larger mathematical impact on you and your account survival rather than on the positive side making that amount. So it's okay to miss a nice trade you should have been in. It is not okay to get into a trade that you should not have been in. Those are not the same. Those are not the same. Anyway, back to this Apex thing. Well, while we're waiting, I mean, because right now it seems like we have to wait to see if the Nasdaq has strength or not. Oh, dude, is this? Hang on. I'm watching this real close. I just want to make sure I'm set up because I'm trading these accounts in two different ways. I'm watching this here. Where is VWAP? VWAP is up at 38. All right, this one might be a better way to see what I'm seeing. A better way to see what I am seeing. Oh, do I have my trade copier set up properly? That's probably a pretty important question. A pretty important question. 800, 489, 622, 6289, and then okay, I think I did it right. We're going to find out. I'm wondering what's going on with this VWAP test. We have that support at 600. How's Bookmap looking? Remember, if you... oh, okay, the point of control... hang on. The point of control... The point of control. Well, that was horrible fucking timing. That was horrible timing. Actually, atrocious timing. Had I waited 10 seconds. All right, I am trading these ideally in two independent ways. What was this high? But that honestly might not matter pretty soon here because this is not looking good. Do I just want to kill this early? I'm watching this right here, the super trend and the 50, and also this key level of 600. What I want to do is use this point as my risk, but first I just need to see if there's a little bit of a bounce. I was trying to play, what I was attempting to do was play this 10-minute break above. I was trying to play this test and this recovery, but unfortunately got smacked there. So I took a 50-50 chance trying to go with the recent trend. And when I say recent trend, the EMAs all crossed over to be bullish. And I was thinking, okay, at minimum, let's test VWAP. But it looks like it actually got rejected a bit early. I'm not. It's in the middle. It's dangerous. We're playing with fire. Mag 7 just got hit. I was seeing this pop right here. That's where I got excited to get in. And unfortunately, right after my trade, it kept going. I was basically hoping this was the bottom. I was hoping that the market liked above 600, and I was hoping that this pop would keep going. Unfortunately, after my trade, it is not still going. Let's give this a second and see what in the world is going on. But I might. Do I want to manually intervene right now? I want to see this retest on NQ of 600. Shit. How do I want to handle this? Do I want to close all right now, or do I want to go for the higher low? I can't let it get out of hand. That's the one thing we can't do. It's okay to take a loss here. A survivable loss, as I like to call it. But man, I got faked out on this right here. When I put this pop, which I have on a different screen, together with the fact that we're selling their VWAP, I was like, oh, okay, we're going up to VWAP. And then from there, maybe we get rejected or not, which is why I was trying to take in my profits before VWAP. But unfortunately, we had an undershoot, and now we are back below it. In retrospect, to give some real-time criticism, whether this trade does or doesn't work for me, I probably should have waited oh, fuck. I just got clocked. Never mind. Stop got hit. Doesn't matter anyway. That moved way too quickly. Holy shit. And I got a horrible fill. Dude. What the fuck? No way. I had to stop at 85 and it filled me at 55. It gave me a 30-point worse fill. Holy shit. That's how quickly that... I mean, we could probably, if I assumed, we could probably see it right about here. That move well, we could probably even drill in 5 second. It ripped through it. Holy fuck, dude. How did I possibly a 30-point fuck up? There must have just been no liquidity. I was using... I guess not 85.80. Sorry, excuse me. So it wasn't 30. Holy shit. I was using this bottom here and it just ripped it. It gave me the fill right here at 53 at the extreme of this bar. Holy crap. There just must have been no, yeah. I was using this as my risk. I had it at 80, even though this is saying 76. I put mine at 80 and it gave me a fill at the close of this bar. What the fuck was that? Well, that was bad. Holy cow. That's a lot of slippage. And it's coming back anyway. Dude, I just got brutalized on that. How much money was that? 30 points, 600. That's an extra 1,200. Fuck, dude. That's brutal. That's insanely brutal. Holy shit. That's something. 600 per contract. Yeah, and I had two. Holy cow, dude. That is, it just ripped right through it. How, man? How is there that much? Oh, that's a brutal one. That's the shitty thing is like I'm not even necessarily sure how to protect against it because it's not like an order type. I had a stop market, and I think stop markets are appropriate relative to stop limits. Stop limits are really dangerous. In this particular scenario, it would have worked out better for me. But wow, dude. Fuck. That basically more than doubled the loss I was willing to take. I was trying to keep the loss $1,000, maybe a little bit more was what I was using really for my risk. And it more than doubled it. It more than doubled it. Fuck. And now it's coming back at... That's... Yeah. I assume it had to do with a... When you see quick, like, things like that, generally, it's a big dump right here. This is what fucked me up. Someone dumped it, and there wasn't liquidity, and by the time it found liquidity, it just got me the fill because I had the stop market. But right here, someone dumped something of size in the Mag 7, and it was one block trade, and it just fucking steamrolled me. You could see it here in the S&P 500. So there was just no liquidity at those levels. Wow, dude, I got steamrolled. Oh, dude, that is a brutal one. A brutal one. Look at right. Yeah, just, I mean, you can see the timestamp. You can see it in the options. Someone just dumped size at 10:06:25. And there was such a lack of liquidity on the book that it just fucked me up. Wow. Wow. Do it again. I'd prefer to not do that one again. That was fucking insane. Damn. Some big... What was it on? It had to be on one of the Mag 7 plays. Was it Apple? No, it wasn't Apple. Avago, a little bit. Coin, a little. CoreWeave, no, that's not going to be that impactful. Someone did hit Microsoft, a little bit of MicroStrategy. Meta was in there a little bit. Netflix, no. Nvidia, a little bit. Oracle, a little bit. Palantir, yeah, for sure. Tesla as well. So it seems like the whole Mag 7, like maybe excluding a couple names, but it wasn't one ticker. It was a chunk of the Mag 7 just got fucking unloaded there. And it was someone selling longer duration calls and buying this week's puts and a little bit of farther output. So someone like with one big order bought puts and sold calls. Now, was it to open or to close? I don't know. We'll find out later, but you can see what it did to the delta there. Holy cow. I mean, we went from, what was this reading at? A negative 350, 60 million notional. We almost doubled it. We got down to 640. And then look at what that move did to the S&P 500. We were at minus basically $1 billion. Or what was this one? We were at minus 1.5 and it dropped it all the way to 2.2. That's a sizable hit. Holy cow. And that's why you get, and like it all played out in what, 15 seconds? On October 24th, I lost $8,000, 80 point slippage at 8:30. Well, it's not slippage. That's where the book rebalanced to after the news. That's not slippage. Just like, as you guys just saw in real time, just because you have an order at a certain place, that doesn't guarantee you get a fill there because you don't know who, like if the market's actually going to be there or not. And doing that on a CPI announcement, once again, it's not slippage. And to think it's slippage, no, it's just like that's where the book is at. All of a sudden, the equilibrium, the highest willing bid and the lowest willing ask it's going to move after that news. It's not like to go up or down, you have to trade at all those individual levels. We can see gaps. Moves like those are what forced me to start trading MNQ instead and just accepting make less upfront, but it'll blow a fewer accounts. Yeah, probably. And it's kind of why you have to, as I was alluding to before, have to have a little bit of a lucky streak of building out that buffer to absorb it. So for example, my bigger accounts can take that hit. My smaller accounts cannot take that hit. So there is a little bit to trading the right product and the right amount of contracts in said product relative to your buffer size because of shit like that. I mean, I'm showing you we were on the 5-second chart there. It was just a brutal 15-second thing. And by the time it hit my stop, the next thing I guess it printed at was 25 points below. And I was already taking on a slightly larger risk than I should have. Granted, it was not horrible. But geez, that was brutal. And in quote unquote real trading, it can also be brutal, but I just anecdotally have noticed that it is worse to the sim to funded environment. And I think it's due to the delay of the other checks that these firms have to do, such as, is your account still live? How many contracts can you trade? There's a little bit of processing that has to be done when you're entering your orders and when you're executing your orders. And I think due to that extra amount of processing, it is slight. Well, it depends on how you define slight, but I think it is measurably worse off than in a quote unquote normal environment, just because of the extra ones, just because of the extra steps of processing. But I try to play this recovery here. I figured 1, 2, 3, like, all right, cool. Maybe we're going to get going here on this breakout. I was just trying to play it to VWAP at 38 or whatever. My stop was closer to like 70 or 80. Probably should have had it at 95. And I ended up getting a fill all the way. That's fucking brutal, dude. That is a brutal one. All right. Well, once again, the name of the game is to just not get tilted and maybe end the day here. Maybe if I can see a recovery. I'm even looking at this. I'm watching the 30-minute on the S&P 500. Is it going to hold? So basically, is 815 going to hold? If we don't, we're down to 800. Watching that as the next key level. See how they did try to bounce it initially. I'm curious about what the hell this trade was, or like the reasoning behind it. Was it a bot? Was it a person? Was it a hedge fund? Was it an insurance fund? Like that. Fuck, dude. That really messed up the flow today. That really, really messed up the flow today. Let's see. VIX is probably up a bit. Not as up as much as you think it would be. Obviously, the 30-minute Orbo broke to the downside on both the SPY and the Qs. Both broke to the downside. Here, I can mark out what that 30-minute Orbo was. So that was the high and the low of the first 30 minutes. Clearly, we broke to the downside at 10:06. And in somewhat of a similar situation, if you look at the Qs, here is the 30-minute Orbo high. Here's the 30-minute Orbo low. And same thing at 10:06, they both broke to the downside. So unless we see a pretty strong bounce, and we might see a strong bounce at 815, 800, statistically, the fact that we had downside Orbo breaks on the SPY and the Qs, and now you have the 10-minute and the 30-minute pushing. If the 10-minute and the 30-minute on both ES and Q remain on the south side of these EMAs, that we're setting up for a bearish situation. We had bearish 30-minute Orbo breaks, and I am trying to be mindful of the fact that the 30-minute here on ES can still catch itself. That's like the one little caveat, but you're seeing the Mag 7 bleed, and you're seeing the S&P 500 bleed. But with that being said, we are at a key level. No one would be surprised if we get some crazy bounce off of 800. That is totally possible. A little fake out sweep low. But also, if we fail there, I kind of already showed you that we could easily puke to 70, was it? Yeah, 770. So there might be 30 points of downside right there. So just another thing to pay attention to. All right, we're making fresh lows. Jesus, VIX is picking up. Yeah, both broke here. And I cannot believe the amount of slippage in that. Holy shit. That's a crazy amount of slippage. A crazy amount. I think what happened was that options order hit and then the book repositioned I just think there was like no liquidity there and we just fucking well, you could see it. It's right here. See how it was just like one jolt? Yeah, there was no, if we look at these orders, it was just one jolt to the downside. That's what fucked me up. I think the book was just pretty thin there and we cut through it like it was nothing. I don't mind the trade because when you come to a key level, you have a 50-50 shot of a breakout or bounce. And even though it was a uniquely bad beat, I don't necessarily like this concept. Ooh, a lot of people trying to sell. Oh, that trade just disappeared. No, it didn't. Right here. A lot of people trying to sell at 69, I guess. 300 contracts. Let's see if this gets absorbed. Oh, wait, you guys can't see it. Right here. I'm looking on Bookmap right now. Also, if you want Bookmap, it's in the description of the video. But anyway, there's a clear amount of contracts. Oh, they just pulled the order. I don't know. They didn't market it out. There would be a much bigger bubble. They just pulled it. That was sitting there as some resistance. And then as we got up close, as we hit 65, the person trying to sell 300 contracts at 69 just disappeared. And I don't see them anywhere close. Did they go up to 600? No, they didn't. Interesting. So they were at 610. I think it was the same player. Could be different players. The fact that it moved perfectly tells I think it's the same player. So they're moving their sell order from 610 down to 69. And now it doesn't seem to be on the chart. And there's a lot of people down here all the way at the bottom trying to buy at 500 flat. And that's currently a live order. And the point of control is up here at 620. And then the VWAP is above it. Okay, let's see. All right. Not only is this roughly a, 40% retracement of the Orbo on the break and everything. Well, let's see actually what retracement this would be. All right. The 50% retracement from the high to low is basically 680 on the SPY. And then if you're looking on the Qs, it is pretty much 620. So we can watch that for a little bit of a fib retracement, roughly the 50% just from this. VIX is picking up a little bit. Palantir's actually taking a hit. Tesla's kind of taking a hit. It's all coming back down to this. Does this 15-point zone, this is a buying area. It's just the question of who's going to be more aggressive. I'm now a little bit gun shy myself because I'm kind of worried. Would have had a random point. Would have had a random ass point. People decide to dump another chunk of options and just completely fucking bulldoze me. Let's see. We're attempting to bounce back up to the 30-minute Orbo low. That's the bottom blue line in both the SPY and the Qs, and we're kind of battling it out there. I think 680 and 620 are going to be pretty telling on the SPY and the Qs. Of do we get above that? Specifically this high at 1010. Do we take out the 1010 highs? Because that would mean we have a fresh high. But right now you have lower highs and lower lows. You have 5-minute, 10-minute, this 30-minute. This closes in 6 minutes. I think this is going to be this bar where it closes, and then the next bar where that closes are going to be pretty freaking telling in my book. And then obviously the NASDAQ, the 5-minute, the 10-minute, and the 30-minute are all below the clouds. In fact, even the 4 hours kind of below the clouds. So it's already overshooting where the bulls need it to be. So if it's going to turn, they want it to turn quickly. Mag 7 still looks bearish. S&P 500 still looks bearish. Maybe It's they're waiting for the initial balance to play out. We have 6 minutes for the first hour. I cannot believe I got so fucking goosed on that. I'm now in a 2.5K hole. Holy shit. I cannot believe my stop was at 75 and it filled me at 53. 22 points. An extra 1,000. I should have a 1.5K loss right now. Way more manageable. Shit. Fuck. That's so demoralizing. But had I been a bit more aggressive with the stop, I probably would have never had to deal with it. Of course, like that's an unfortunate, like this played out absurd. This played out in 2 seconds. I want to clarify this because of that options order. This drop, you can see the time here. It was a 2-second differential and this whole thing played out in 4 seconds. So it was just the market reacting to one large block trade. This was a 4-second development. And so I think the book was just a little bit too thin and fucked me up. I'm watching this reversal. I'm looking at 46. I'm watching, I'm thinking. We're seeing a little bit of a reprieve. The SPY just got a pop. People bought calls and sold puts. Like right there, we found some life. It recovered. It bounced off of 807, recovered above 15, ran into the 50 EMA. Let's see if it actually can hold this or not, or if this is like just a little fake out. We still have lower highs and lower lows. That pump kind of hit it and kind of hit it hard. Jesus. Oh, Tesla just got hit. I almost bought that. I almost bought this breakout here at 72. I'm happy I didn't because my stop would have been 46 and I would have already been clocked. So I would have been down another 1,200. So this would be basically $4,000. I was like, and look how quickly that would have played out. That would have been brutal. Absolutely brutal. Yeah, I would have already been clipped. I was thinking about going in at 72. It would have knocked me out at 46. And if this bounces back up, I'd be screaming to the high heavens. Oh man. We have this clear trend. Which way is it going to break? Which way is it going to break? Price momentum, clearly bearish. Price structure, that's dependent on your time frame. Options flow, bearish, but we just saw a little bit of life. And even though it's kind of fighting it, what I keep looking at is like, okay, are we going to, like in terms of risk reward, it's not the craziest thing. The bounce off, like if we break out of this or your risk is 807, or do they want to touch 800? Are we going to fail from there? Are we going to bounce above? I'm attempting to do everything in my power to be patient and wait for 800 and see what happens. But you never know when these buyers are going to step in. You never know. The Qs are dragging us down. Nvidia's getting hit. Tesla's getting hit. Microsoft's fine. Apple's actually looking good. Apple's the belle of the ball today. But Nvidia is problematic. Tesla is problematic right now. They are not helping things out. Yeah, the tech sector is clearly weak. S&P 500 is attempting to hold. It's attempting to. Oh, this is very much not the position I wanted to be in. Not today. Not today. Not today. Not today whatsoever. Which way are we breaking? Are we going to take out 18 or are we going to take out 12? Is this a double bottom here on the Qs? We keep trying to get above the Orbo low. We're having problems. We're almost at the initial balance. All right, we officially have the initial balance. The initial balance is in, as in the first hour's high and low. Actually, I think I have a new indicator, and we just touched the initial balance. Got a quick 10-point trade off of it. But I think this one, yeah. All right, here I found this new indicator that actually maps out the initial balance. So obviously the red dashed lines are the high and the low of the initial balance. So we made the high here at 937. We made the low here at 1020. And then the blue line is the midpoint. It's the perfect 50% in between it. So once again, it's the IB, the initial balance, the first hour from 9:30 to 10:30. It is the first hour of the regular trading hours, high and low. And just so you know, the reason I have this up is because I've recently been doing some research on fading the first time it's touched. So right there, we touched it. So you would fade it as it buy at that point. And at this point, I mean, actually that would have already worked pretty nicely. You already had a quick 10 points. You could have been in and out. So that's one of the strategies that I've recently been researching is on the first touch of initial bounce, just the first touch, fading it. It doesn't count later on in the day. It's literally just the first touch. So we made it here. This was the low. We gave it a touch at 1029. So that was the touch. This was the break. So regardless, you're in at roughly 32, 33. And right there, you got to bounce up to 50. So you could lock in one, set the other to break even, and see if you could ride it up to VWAP, see if you could ride it up to the midpoint, something like that. But obviously lower highs and lower lows as of right now. But that's what's on the screen. It is a new indicator. I was messing around with it last night, and it's literally just marking out. It's just a visual assistance. And the reason I needed it is to load in these values to start back testing to see if that strategy is really worth anything. To see if that strategy is worth anything. And it looks like we are about to crack it. Yeah, so at this point, you would have locked in one trade at an ATR movement. The other one would have just got knocked out for break even. The ATR on the 1 minute was 20 points, so you would have locked in $400. So you'd be up 400. The other one's break even, and that's it. You move on with your life. That was the trade. So a lot of the days it goes like that, but some days you catch these gnarly reversals that pay quite a bit if a whole new trend is created. Have you heard of any thoughts on the Alex Cole? No, I don't know who that is. Never heard of it. Might be good, might be horrible. I guess no comment. Just don't know what it is. Wow, we are bleeding today. Especially the NASDAQ. Technically, the S&P 500 is still holding. I know it feels shitty because we're just trending down ever since 10. We just tried to get going, and that was exciting. And since then, I think we're all a little zoomed in, focusing on this sell-off. But overall, we're not that far away from the opening value, at least on the S&P 500. And we're still in the transition zone, and we're still above this key level. Of course, within 1 minute, things might change, but just to give you an idea of where we're kind of at on the day. Where we're kind of at on the day, it's probably going for this 800. Probably wants to give that retest. Man, there were a lot of quality entries on NQ to take this fade to the downside. I was just hesitant because this 30-minute. Yeah, I think I was on the wrong side of it. I shouldn't have been betting on this 50-50 opportunity. I don't mind 50-50 opportunities. I shouldn't have been betting against it when the trend was unclear. So even though it was a bad beat, if you blame everything in your trading career on bad beats, like, you're not going to get anywhere because there's always just inherently things out of your control. And if you're going to fucking bitch and moan, there's no crying in the casino. Focus on what you can control, and hopefully you do it well enough that the outside of your control issues aren't there. There's always going to be things outside of your control. And if you're attributing those things to your downfall and your lack of success, there's no point in you being in this game because they're always going to be there. And if you're always blaming them, that's always something out of your control. And where the fuck are you going? So I think even though you guys literally witness a horrendous bad beat of something that was just some big block order, I think it's much more mentally healthy and also increases your odds of turning the ship around when things are going wrong. And honestly, just in general, being a successful trader of like, okay, whatever, we get it. Bad shit happens. Like, it might be in your control, it might be out of your control, but you should be focusing on what's in your control. And what's in my control of like where I could have been better is not taking the Icarus signal when it was unclear. I was a little excited because I saw that the S&P 500 was pushing bullish, but the NASDAQ was saying, we're still testing. It tried to get going. No, it tried to get going. No, it tried to get going. I could have waited for another cycle, as in the push back up and then the next pullback when we were clearly bullish. So I think sometimes it's, like I said, it's going to make you a better trader. I think it's mentally healthier to not focus on the shit out of your control. I think I could have waited for the next, if there was this cycle up. See, I was betting on that cycle going up, me making my money and being done on the day, where if I was a bit more patient, I could have waited for the clear breakouts, the retest of those EMAs, and on the bounce of those EMAs gone, rather than attempting to play that first breakout, if that makes sense. So bad beat aside of that bullshit of slippage, it was going to be a losing trade regardless, and focusing on just the fact that it was a losing trade, diving into like what I could have done better based on that information at that point in time. Because of course, everyone in this world can Monday morning quarterback. But based on that information, probably shouldn't have been in that trade really at all. And then what I could have done was play, man, I mean, there was an opportunity to play this failure right here at 10.13, yeah, right here. We pop up, it fails at the EMAs. We pop up again, puts in a lower high, breaks it. You could have had a nice entry here at 70, rode that all the way down to 33. That's 40 points. You could have, I mean, there was this failure. Depending on your risk, you might have been stopped out, but then it popped all the way up. This popped up lower high. When that fails, you could have another 50 to 30 trade there. Right here was another entry, popped into the EMAs. That one started to fail. So basically, me trying to rush a trade in one direction, probably because of my larger bias, caused me to get into a trade where, yes, it was going to be a loser. The loser doubled up because of the bad beat. But then on top of that, it caused me to miss out on pretty viable trades right here. I think 10.13 was a legitimate short. I think in here, you could have taken a stab at 52. Maybe that was in your risk tolerance. Maybe it wasn't. Maybe you were stopped out. It pukes, pops. Right here was another viable trade, 50. That was only a break-even test. That was fine off of VWAP. And then you had another one here at 40 that ended up working as well. So there were various trades in there that I missed. One really good trade. Depending on my risk, I would have either won or lost this one. Another good trade, another good trade. It happens. It happens. And that's one of the things of like, yeah, I think I personally like to remind myself of that stuff of like, yeah, it's one thing to bitch and moan about bad beats and quote unquote the things are out of your control, but that's a human thing. If you're focusing on that and you're like, fuck man, like what a, like yada yada yada, could have gone my way. Yeah, could have. But if you're always just complaining about that stuff, like what's the point of you trading? You're not going to be able to fix the things out of your control because by definition, they are out of your control. So I like to catch myself when I'm doing it. And hey, maybe this makes sense to you, maybe it doesn't. But when I find myself complaining about things out of my control, I like to remind myself of, what's the point, dude? You're not going to fix those. Focus on the things in your control and attempt to be realistic and self-critical. And I think there's a point that you could be overcritical, but I think being critical in terms of, hey man, like, what was the point of you really taking those longs when we didn't quite have confirmation? Yeah, the 5-minute was looking good, but the 10 didn't have it. The 30 didn't have it. We were still a little bit in no man's land. I was leaning on the fact that the SPY was looking stronger. The 5 was clearly above. The 10 was clearly above. The 30 was. But I should have been patient enough to wait for both ES and NQ to be showing that type of strength. And it clocked me today. It clocked me. It clocked me. It clocked me. And that's just going to happen. So I hope that makes sense. Maybe that doesn't make sense at all to anyone listening, but I feel like there's at least one person in here who's that's going to resonate with. If like, okay, yeah, shit happens, be prepared for it, but let's not dwell on it too much, because if inherently, if you are going to dwell on it forever and ever and ever, what's the point of you doing this? What is the point of you doing this? All right, I care about this high. I care about this high. Obviously, I care about the lows. We have the IB levels right here. We are on the south side of the IB, but I'm wondering if we're going to get a recovery back up to 33. I'm wondering about that recovery. And VWAP is in the realm of 615. Which is it's pretty much just above this high. So I'm watching this downsloping trend line to see if we reverse trend. I'm watching the bottom of the IB because maybe the market's not going to accept us being out of it. And then obviously I'm also watching just the recent highs to see if we're at all switching trend. And then throughout all of it, I'm going to be watching the flow. Mag 7 was puking, but at least we stopped. We're now flat. So the flow has stopped. SPY, same thing, maybe double bottom. Did we touch it? No, we never touched it. We never touched 800. We caught ourselves 2 separate times at 807. Oops, did not mean to do that. My apologies. Let's watch. Maybe we should watch more of the extreme one. All right, let's watch this down sloping trend line. Let's make it blue because maybe that doesn't pop anymore. But anyway, let's watch to see this, because this might be a double bottom reversal. Of course, it could just be a rejection, but the bulls have stepped up twice at 807, or mathematically, you could say the bears stopped pushing it downward at 807. Whatever. 6 to 1, half dozen to the other. Aren't you fighting the trend right now? Well, I have no position on right now, so I'm not fighting with or going with anything. But what I am watching is my anticipation is there might be a large reaction to 800, and I was trying to play that, but maybe the reaction's coming earlier. You could argue my trade before was fighting the trend, but I was looking at ES, and at that moment in time, it was bullish. Like we were above. And then I was hoping that even though the NQ, the trade was right around whatever it was, right around 10. So we were above here, and it just so happened that we got smacked. So I was front running NQ going bullish. It was neutral. And I was using ES as my barometer of saying, oh no, that one's bullish. So maybe NQ is going to push bullish, but you never know. Maybe the weakness in NQ drags things down. And that's exactly what happened. So right now, yeah, 5 minutes bearish, 10 minutes bearish, 30 minutes bearish. 5 minutes bearish, 10 minutes bearish, 30 minutes bearish. You throwing on a bullish position at this moment, it is fighting trend, but we're also at these key levels where, for example, if you caught this, you could just do minimal risk. And you've probably heard of the saying of like catching a falling knife, and that's what you're doing. But sometimes it works, especially if you can get that minimal risk and you throw in your buy order right at key levels. Now, I'm by no means campaigning that 807 was a key level. Obviously, we're watching 815. We're watching 800. If you somehow put in an 807, maybe because of the previous low here, hey, congrats to you. But we're not out of the woods. Yes, as whoever said that, you are right to point out you are fighting trend. We have lower highs. We have lower lows. Like right now, the price structure and the price momentum are down. The Mag 7 just hit a fresh delta low. The SPY is trying to show a little bit of strength here, but we're not necessarily out of the woods. We're not necessarily out of the woods. I'm hesitant to chase this to the downside for the larger reason of I think that this is an overreaction. And also, I don't know if there's much meat on this bone because I would expect a bounce at 800. I don't know if that bounce is going to last, but if I take an NQ short, I just don't have the most distance to go. So I'm looking forward to see if I could get on a legitimate trend reversal, which I just have to be patient to see if there are signs of a trend reversal. So right now, I can't necessarily play it bearish because I missed that entry. I think that entry was right here. I think the last entry to go bearish was at 1013. We popped, it failed. We started to break down. You're shorting at 70. Your risk is 92. It flushes to the IB, creates the IB. You could take your profits there on the next one. You lock that in. The other one's break even, and you probably got out at 500. That's probably the optimal play there based on information you would have had in real time. So that was the bearish entry. And maybe if you had another contract, you're just sitting at break even to see if it pukes or not. But right here, we're seeing it's already recovering IB. The market tried to push it below IB. We're bouncing out. So even if you take this long, you could take the IB recovery. Great. You're long at 42. Your risk is 26. So that's just up to you. Are you okay with risking 26 based on your buffer, your account? Are you going to use MNQ? Are you going to use NQ? You never know. You could argue that it's 50-50. I would argue you're fighting trend, but you never know when trend reverses. I'm watching this downsloping trend line on the S&P 500. Did that break? Yeah, it's not like it's just the battle. We're battling at IB. That is that red dash line. This is the initial balance low. And if you took that trade, already knocked out. As I said at the start of the stream, and as I've said on many, many, many streams, your life is easier trading with trend. So it's probably easier to fade this IB right now. Even though my own bias is bullish from a math perspective, it's probably easier to fade this and just bet on the trend continuation rather than betting on a trend reversal. Trend continuations happen a lot more often than trend reversals. There's only certain moments in time where we have trend reversal, while in between all of that, you have all of the time of a trend continuation. So if you were trying to trade structure and trend, you could have probably taken this failure here at 45, but if you wanted to wait for confirmation, you could have taken either this breakdown at 35 or 26, with the risk being these recent highs. And that's me calling out in real time, having no idea where this is going. If I were to play it, let's just be the most extreme and say your fill was at 26. I would do my first fill either at 10 or 05. And as soon as one of those gets filled, I'd move my stop to break even, and then just pray that the breakdown of 500 actually happens. But life is easier when you trade with trend. Now, it's kind of up to you to decide how you want to define trend. You could use whatever time frame. Like one is not better or worse than the other. The time frame should be specific to you and your trading style. So you might be a scalp trader using the 1 minute. You might be a swing trader using the 4 hour. You might be something in the middle. So I'm not here to tell you that one is better than the other, because that's not true. There's better and worse time frames based on you and your trading style and how long you want to be in the market for. Truly, like it's not better or worse, but for whatever that is, your life will be easier trading with the trend of that appropriate time frame. So right now, if you're day trading, yeah, the fact that the 5, the 10, the 30 are all bearish on ES and NQ in this moment is probably indicating to you that it was a higher quality trade to take this short rather than to take this long. And even with that, like, just because you're trading with trend, it's not a guarantee. Of course, trends do switch. But by the way, you would have already locked in one. So remember, in this hypothetical trade, we were talking about the breakdown at 26. You would have just either locked in at 10 or you would have locked in at 5. Your stop would be at break even. And now you have a freebie trade. Like if it flushes, great, you're in it. If it knocks you out for break even, which it almost just did, but it didn't. then it whatever, like no sweat off your back. Technically, you could take this trade right here. It's a little bit close to a key value, but taking this 08 breakdown's not insane. Your risk is 24. It's a little wide risk. Your first target would probably be 500. You could be aggressive and move your stop to break even, but like I said, the chance of the bounce off of 500 back to 508 to knocking you out is pretty high. But whatever, if it doesn't and just flushes, once again, it's a freebie trade, so maybe you shouldn't care about it anyway. If that makes sense, just kind of talking about this stuff in real time. But trend is your friend for a reason, and all you have to do is be disciplined and stick to it. I'm still very much looking for this test of 800. The fact that it's almost 11, we're 10 minutes out from 11 a.m. I wish this happened earlier. I was more of a fan of, I kind of wish minute 1, minute 2, we went down and reevaluated it, because right now, whether we recover or don't, we're just chewing up time on the day. There's less time to do anything. So let's get these big tests in early so we have more time to see what the reaction is, and then more time for a trend to develop for the remainder of the day. Because right now we've basically pissed away an hour and a half and we haven't really had it. We might be triple bottoming here for all I know at the strangest level of 807, 808, which why? We never tested this and we're having the worst time breaking out of 815, but we're going to see. We're going to see. Mag 7, it was puking. It's now recently flat. S&P 500 also just not looking the best. Bearish, 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 bullish. But the 5, the 10, and the 30 are now bearish. The 5, the 10, and the 30 are bearish. Oh, brother, oh, brother, oh, brother, oh, brother, oh, brother. Yeah. All right, I guess I'll move the reversal alerts to the highs that we have, but we just have lower highs and lower lows with bearish momentum. Options flow, not looking the worst we've ever seen it, but looking bearish for sure. And putting that together with the fact that we just haven't touched 800, you'd feel that it almost becomes a self-fulfilling prophecy. Too many people wanting to see that. Reminder, you have 2 more trading sessions to take advantage of the current Apex deal, 70% off with that code Goonie. You have today's trading session and tomorrow's, and 70% off, decent deal. But the really good thing is the fact that the upgrade fee from the eval to the performance when you pass the test is dirt cheap. Tesla is breaking down. Tesla's alerts going off. Nvidia not looking the best. Mag 7 still trending down. SPY got clocked again. Yeah, you're just looking for that 800. You're looking for the 800. Golly. Maybe the market wants to catch itself at 500. Could be a double bottom here. Could be a triple bottom on SPX. Kind of what I'm watching. Double bottom at. It is a technical level here on NQ. But you would just really think that they want to see 800. But who knows? Maybe if enough people think that, yeah, it could become a self-fulfilling prophecy. Or if there's enough people betting on it and it starts to not happen, the unravel of it could actually lead to a larger spike to the upside. So I could see this slice in both ways. And that's why the game is not a game of predicting. It is just a game of reacting to real-time stuff. And just, can you take advantage of whatever you think the best odds are, but with minimal risk? That's really, really what you should care the most about. Sadi works nice on the 5. People try to say that stuff from anecdotal evidence and then they never do any research. They're all going to be roughly the same. It's all appropriate for, it's not like it's better or worse on a particular time frame. It just tells you information on that time frame, and statistically it's going to be accurate on all those time frames. People like to make assumptions, and I find it very, very dangerous in the world of trading because they make assumptions of better or worse, and I find it to be incredibly dangerous, especially when you don't have any back testing. But it's going to be, I mean, it's telling you the same information. You're just applying it to different data sets, but it's not like a different data set, especially when you're comparing whatever, the 5 versus the 10 versus the 15. It's not going to be that skewed one way or another, like at all. To think that like one is amazingly good and then to not even change the EMAs and just apply it to a different time frame and think that all of a sudden it's going to be like horrible. Well, that just doesn't make sense whatsoever. It's the same math. It's literally just a different underlying set of data, but because all of these minute data sets are uniformly distributed, you're going to get the same results. Obviously, on a ratio perspective, the magnitudes will change because bigger time frames generally have bigger ranges. But if you look at on a relative basis, it's going to be the same shit. We are just painfully waiting to see if this is it. Like, this is the most slow moving, like, train crash you could possibly have. Like, how painfully slow. Like, it just either do it or don't. It feels like we are watching a slow-mo car crash right now. The most painfully slow car crash that could possibly exist. And I guess that's the patience part of trading. Yeah, molasses. Yeah, it truly feels like the slowest car crash known to man. Fuck, dude. It's getting boring. I guess Nvidia, Tesla's a bit worse. I mean, that one really got hit. There, maybe it goes. I'm going to try to see if I could play the flush to 800 on my Vanquish account. Here, let me get the trade set up. I'm not going to throw it in quite yet. We had some good trades yesterday, made some money. Here, let me get it set up over here. It's not even necessarily the most simple play either, because, like, what if it... is it going to finally go? Is this it? Is the 19th test the test that we finally crack and see 800? Dude, I guess not. What the fuck is this, dude? It's so slow. It's so slow going. Is it gonna... we're watching fucking paint dry, but it's paint drying on the edge of a cliff. Like, it's just, are we going to this bottom? Like, look at the SPY. We popped, we puked, and we haven't done anything since 10:15. The Qs are definitely worse off. Definitely worse off. Maybe I shouldn't be doing the white one. Maybe the white did pop a bit better. I suppose you could watch this trend line. Is it going? I don't know if I've ever seen something so slow-mo. So slow-mo. We're just waiting. Crazy. What's the opposite of a market halt? I mean, it feels like this is just this. Look at that. It caught itself again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Like, based on the 1 minute chart, this is the 15th time it's caught itself. Well, Matthew Potential Kohrs, could you please show me the spot camera for Google? Por favor, I eventually get the service, but this is more fun. Shout out, dude. I'm more than happy to show you. Where is Google? Do I not have Google on the list? That's weird. Google. Not doing anything. No real trend on Google. I should add Google to this. Apple was trending up, got hit. Microsoft was flat, got hit. Meta slightly trending down. Netflix did pop, going flat. Nvidia flat on this week's, but longer duration is getting hit. Oracle down. Palantir flat to down. Tesla flat at first and then very much down. And Google is just flat and messy looking. The NASDAQ catching a bid right now. The Mag 7 also catching a slight bid. And the S&P 500 is doing nothing. So we're just, folks, we're stuck in purgatory here. You know what I might do is on this. Can I just, no background. All right. You understand that this white block is our transition zone. I just think it's a little bit easier to see without that being colored in. So I'm kind of watching to see if we have a reversal. We're just waiting. I would have felt more comfortable about the reversal had we actually touched 800, but we haven't even really reversed yet. We're just waiting. CoreWeave hurting. Yeah, it didn't. The market reacted very poorly to its earnings, but we had one attempt at a reversal right before 10, and then the 10 a.m. pop just fucked it up. We're just waiting. We're just waiting to see who wins. Mag 7. NASDAQ showed a little bit more life right there. 1057 going into the new hour. No one really touched calls, but people did lock in puts right here. You had some put buying starting at 1057. So we saw a little bit of pump in price. The pump in price is due to put buying, not yet calls, once again, specific to the NASDAQ. But that's what that pump was about, was puts being locked in. So maybe suggesting that they want to take, I don't know, here's a little bit of a trend line. It's still fighting trend. And hey, if you want to do a counter trend trade and say, no, man, this is the bottom, maybe. I mean, you could watch 815. You could watch this trend line breakout. The name of the game is, can you minimize your risk when you're doing it? I mean, we keep just bouncing off 807, 808, which I find to be fucking nuts. But hey, I guess that's what the market is some days. Sometimes it's fucking nuts. SPY showing a little bit of life right here. It seems like 1057, the S&P 500 and NASDAQ caught a little bit of a bid, but will it lead to anything? Or is this just another pump that they're about to dump anyway? Right here, we had a pump from 86 all the way up to 23, a 40-point pump like it was nothing. Obviously, we are trending down, and obviously I'm just marking out all the previous highs as potential reversal targets. If we actually reverse, we did puke below the initial balance. We popped up. We tried to fight. Nope, failed. 26. That trade actually would have worked well. You would have been out at 10 and then 500, and you wouldn't even had to worry about this. We did pump back up into the EMAs. It seems like maybe it's trying to reverse here, but it might just be a trend line test. It might just be initial balance test. So let's watch this recent high, the 1042 high. Maybe we do get a price structure change. And when I say price structure, it's just where are the highs relative to the highs? Where are the lows relative to the lows? And what in the world is going on? And right now we have lower highs and lower lows. By definition, that is bearish. When you have lower highs and lower lows, that can only be bearish. So we're seeing if it can make a higher high. When you are making lower highs and lower lows, and then you make a fresh high, that's your first piece of information of maybe a trend change. And then you have the confirmation on the next low. So if we were to take out 51, okay, maybe. The next information is where is the next low? Is it above the previous lows? And you could either be using 12 or you could be using 86. So you're kind of looking for this pump, and then you're, okay, check one, check two is where's the next low. And then from there, if you want to play it, have at it. Today, it is technically counter trend. And the reason it's counter trend, 5 minute, we might be pushing bullish here. I was going to say, look at it, the 30 minute might be saving itself. Right there. Look on ES pushing 40. This might be the pump, fake out, dump. If it recovers, that's a brutal one. But watching the 5, it might actually go with trend. Technically, NQ does have far more distance to go. But even if you're playing it counter trend, your target could be VWAP or just these levels, just in case it gets rejected again. That could be your target. So if you're going counter trend, I would say be very aggressive with your stop management, as in when you move your stop up. Just in case like you're wrong on it, you could get out with ideally no damage or minimal damage. But we're seeing a little bit of a trend line push here. We see, surprise, surprise, a rejection at 15. Obviously, I'm being facetious, but let's watch this 15 level. We're trying to get the trend line break. I cannot believe it saved itself 15 times at 807. That's nuts, folks. That's nuts. All right. Technically, we didn't make a higher high. We took out this high at 45. We did not take out this high at 42. So we try to get up. So you could call it a double top if you want. It's kind of where we chopped around in this zone. So you have this region where we chopped in the bottom. You have this region where we chopped at the top. Maybe you could play it off of this. It's all about your risk management. What's the flow looking like? Mag 7, slight upward tilt. How's the NASDAQ? Also, clear upward tilt, and it kept going. SPY was going up, currently getting hit at this rejection at 15. Oh, are they just dumping it? Are they just doing her dirty? Completely acceptable if this breaks down to take it. It's also technically acceptable to take this breakout, depending on how degenerate you want to be. Obviously, on this breakdown, if you took this breakdown trade, your risk is going to be whatever the recent high is. And if you take this breakout trade here at 22, your risk is 09. If you want to give it more room, you could use like 98 or something, just in case there's support there. But I find whenever in my own trading, I'm giving it that little bit more leeway, it's generally not worth it. Generally not worth it. This might end up being a nice trade this long at 22. We popped, we pulled back to the EMAs, we overshoot it. We're just struggling. This is the third time we've really challenged the initial balance low. Quite the battle. Quite the battle. Spam risk is calling me. At least it's not margin. Wow. They really keep smacking it at this initial balance. Oh, am I being degenerate or am I finally being fucking smart for once today? Feels like this is a game of 50-50, which is kind of fine. If I'm just wondering if this recovers 25, 26, 27, if that's a worthwhile trade. Like if it can, right here, we pump above the EMA cloud, wick, 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 pump. We push down into it, it bounces. All right, fuck it. I'll take a stab at it. How do I want to play the risk side? Actually, I know exactly how I'm going to play the risk side. So what I'm attempting to do was play this higher low here. It came back in. We're dancing around. A better fill would have been 24, but that's only off by 4 points. I'm not going to complain about that. Fuck, it's coming for me. Come on, save yourself. No, shit. Do I want to close it early? Save yourself. Bounce. 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 Honestly, I mean, I'm not feeling good about this one right now, but I really don't mind the decision. I felt like I was very, very patient. I mean, I waited for the second test. I waited for the higher low. We already had quite a move to the downside. We're starting to push some of those. Like, at a certain point, you could be patient and you could wait for everything to align, but that doesn't mean it's going to trade for you. It does, like, yeah, this is coming for me. It's going to fucking knock this out. Shit. Knowing my luck, it's going to wick it out and then fucking explode and be the trade of the day. Yeah. I took a stab at it. Fuck, I'm giving back a lot of my buffer right now. Well, I was trying to play this being the higher low, and then I waited for, in the very drilled in time period, for another higher low off of that. So I saw this low. I was like, okay, 509. Obviously, that is higher than 86. I waited for another one. Cool, came in at 13. I was trying to play this succession. A better fill would have been 24. I was in at 27, whatever, 3 points. And then I was using that. But like I said, knowing my luck, it's going to wick me out and then fucking go anyway. Flow is looking a little ugly, but we're still, well, it's bouncing right off of that. We're still holding 800. We're holding, are you fucking, like, did I not call it out? It's going to wick me out and then be fine anyway. Disgusting. But sometimes trading be like that. It does not make it. Oh, dude, this is holy shit. 2 points. Turn your stop losses into entries. That's what I'm telling you. I swear, if you guys use my stops as entries, it's a like, I've joked about it to the point that it is very evidently not a joke. You would have taken 2 points of heat and you're already up 20 points. I swear, if you just look at my stops and use those as your entries, like, you're somehow you're going to be lights out. I told you, like, literally rewind this. I said it's going to stop me out and then just go, because that's how my luck is fucking going today. And that's where we're at. I can't chase it. I don't want to chase it because the risk is too far and I still have to be mindful of the risk. You played on a downward trend. If you believe that, you're just not fucking listening, because I explained how the trend switched. Like, I think some people can't just understand some of the most basic fucking concepts. And I literally explained how this high, we took out all these shelves. I waited for the higher low. I waited for another higher low. Like, God, like, some people are just too fucking dumb to understand, like, actual basic concepts. Oh, and by the way, if you took that, some people are joking that they did. I don't know if it's a joke or not. Just move your stop to break even. Don't risk anything. It's a freebie play. If this is a true reversal, great. You took no sweat. Awesome. I wonder if I'm in the mode of a death by a 1,000 fucking paper cuts here. This is another higher low. Oh, do I want to take this? Oh, let me check the trend. Let me do my sanity check here. Minute ran all the way up. Gotta do a sanity check. Wonder how Pelosi played it. That's funny. The 30-minute is trying to reverse here. It really is. I'm watching this setup. Basically, it's taking the long at the initial bounce. The initial bounce is 32.75. It's basically saying, hey, the market doesn't want to be below initial bounce, and we're playing it back up into that range. Oh, it's just, where can I minimize the risk? I gotta minimize the risk. Is the cloud switching back? It wouldn't be the strongest Icarus signal, but it would be a signal to go long above 30. As long, I was going to say, as long as we don't, well, it was to a tick. Hang on. We're right at this trend line. What's SPX doing? ES is trying to push there. It did get smacked there. Like, is this just, are we in the middle of an actual reversal? That pushed. Man. There's a big battle going on at the NASDAQ's initial balance low, which happens to also be this key gamma level on SPX. SPX tried to get going. You could see here, everything tried. It made that attempt. It tried to pop. It tried to pop. It tried to pop. No luck. Like I said, if you took that NQ fade of me, just take your risk off the table. It's fine. If you get clipped, you get clipped. Like you're living to fight another day. You are living to fight another day, which is what I need to remind myself of right now, because my losses are getting pretty fucking shitty. All right. What is this? This is 96. Oh, fuck, dude. This is... The one thing I don't like about this stop is if it's hitting it, yeah, 500 is going to be a natural target and natural support, which makes me wonder if I should move it up more aggressively to 14. And if I move it to 14, that increases the chances of it getting clipped. So I feel as if I'm stuck in the mode of death by 1,000 cuts here, as we're having the worst time at initial balance. So my other option is to take on larger risk and move it to the actual low, but then it gives it more room to breathe and see if it can actually recapture initial balance. That probably would be the wise move had I not had losses on the day. And mathematically, it still might be the right move, but psychologically, I don't know if it is. Oh, fuck, dude. We're caught multiple times trying to catch a fucking falling knife here. I'm seeing the Mag 7 start to curl up. I'm seeing the S&P 500 start to curl up. The question is it going to get going before I get fucking clipped? All right. A nice capture of 50. Like, if we can push and hold 50, 600 is the real line in the sand. Like, we've just, over the past 2 weeks, we've seen a lot just dance around and above 25,600. So part of me is thinking, hey, if this can get going, like, I have a shot of riding it back up all the way to 600 flat. I mean, the midpoint of the initial balance is 89. The start of this downtrend is 600. Like, there's a lot of reason that if we rebound, we're talking about 600, and that's why one of my orders is just below it. we'll put it in at 95. And what's this? This is third. We'll put this one in at 30. Oh, but my goal right now, based on the day that I'm having, is just getting this stop to break even and letting this situation be a freebie play. Obviously, right now, my risk is in the red. Like if I get clipped, I'm still losing money, which is why I'm watching this 50 zone. Because if we take out 50, I can then move my stop up to 14. And then if we take out 80, this high, I can move my stop to break even. That's the plan. There we go. All right, so we de-risked a little bit. Like I said, I'm just sticking exactly to what Icarus tells me to do. I'm attempting to be disciplined. I'm attempting to get my head out of my ass. Part of me wonders if I should just move. I mean, I'm going to be, fuck. I got to think about how this plays out. If it can hold 50, 29. All right. The fact that I can request a payout today tells me that I should just move the stop to break. Okay. I'm front running Icarus. Technically, Icarus does not tell me to move my stop to break even yet, but the psychology management of the fact that I could request another $30,000 from Apex today after already being denied. And as long as I don't blow out my accounts this time, I should be theoretically fine. I move my stop to break even. Mathematically, it's not the right play. Icarus is mathematically the right play. But thinking about just the account management and whatnot, I think this is the right move. Too early for breakdown. Icarus agrees. Icarus 100% agrees. But I think for my psychology management to not get tilted on a day that I'm going for a payout after getting clocked 3.4K. Yeah. Actually, speaking of that, what is my break even if I don't use levels? 3,500 divided by 2, divide that by 20, 87.5. Plus 530, 617. So right here, that's my break-even level. If I ride both contracts all the way up, this top one. This one right here. If I put both contracts at that level, that would pay off my losses on the day. Oh, we don't need this anymore. Mag 7 starting to trend up. Oh, sorry, that was the S&P 500. My apologies. Starting to trend up. Specifically, it is put selling and a little bit of call buying, but it's more so put selling. That's pushing the delta higher. And looking at the Mag 7, it is call buying. It is longer duration call buying that is stepping in on the Mag 7 as we speak. We did not ever hit 6,800. We're still in the chop zone. The interesting breakout is the initial balance to the upside. Where is the initial balance on this? The initial balance is all the way up here at 46. Should I be targeting that? At first, I was targeting the midpoint and this recent high and 600. Something tells me that that's still a good initial one just to take some heat off myself. It feels like even though that's not my break-even point or something, maybe this is the structure I should play. Unload one at the psychological level at a recent high just above the midpoint. Stops already break even. It'll most likely, like, it'll be close enough to chopping my loss in half. And then if we do have a full trend continuation, I could ride it to the other side of the initial balance. I think that's the right move because this is 70 points. That's 1.4K. So that'll bring my loss down to 2K, which is survivable. I'll be able to request money out. And remember, so we took that out. All right, we took this out. We took this out. We're right now right at the initial balance midpoint, 90. I'm hoping for a slight overshoot to 600, which is pretty much also this high at 97. All right. I tried to take a stab at it. That cost me money. It was the fake out. For whoever got in on that, that's the most disgusting trade of the day. That's if you took where I got stopped out at 509, legitimately, you should buy yourself a medal today with all the money you just made. You're up already like 80 points, 90 points. That's crazy. Oh, my first one was right here at this initial balance. Like, as I've already alluded to, I was praying for a slight overshoot just to fill me right at this key level, but it's stalling out at the 50% retracement. Part of me wonders if I should move. Oh, man. Because, I mean, this is cutting my loss down by quite a bit right now. Oh, man, how much do I want to muscle through this? Fuck. Is it just going to get spit right out of there? I need a higher low, and I need it to come in fast. We're watching. Granted, I'm not digging myself further in a hole, but I got myself a nice chunk out, and I just need this to it. We overextended the EMAs. We went into this. I was expecting a reaction. I was hoping, honestly, that the first push through would be an overreaction. We'd hit 600. I could get the fill. Obviously, that did not happen. I was hoping on the flush we would catch ourselves at 75.80. Clearly, that didn't happen. So we're having a little bit of an overreaction to the downside and an underreaction to the upside. Like, that got smacked there right away. Right away, people faded that. They must have had so many shorts sitting at that level. Fuck. And are we shooting out? No. We're giving it all back. Oh, is this going to be my unlucky day? We're just, look at that puke. 90. We've already puked 40 points. I need these buyers to step in right at this pivot low, like now. That's unfortunate. I'm hoping. No, it's not. I mean, look at all these bars. Just red, 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 red. Fuck, dude. I cannot believe it. So fucking close. Oh, what a painful. It just sliced through it like it was nothing. It was hot butter. Hot fucking butter. Wow. Hot butter. That just got sliced. Not even 1 second of reprieve there. Look, like exclusively red bars. Not even one little like, hey, this is what. Yeah. Well, that's why, of course, like I said, you could always fade me. That's going to be your amazing opportunity. I'm telling you, I swear there's like a sick thing that goes on in this market. The only smart thing I did was manage that. I don't have to worry about unrealized drawdown anymore, so I have the leeway to just use my entry as my stop. So I'm happy I did that. Obviously, in retrospect, it would have been nice to unload both at 90 and play the rejection, and I'd be massively green. But wow, that got like so, like, I mean, 89. That had another, the way this one had 2 points of heat of like that flush, this only had 2 points of heat. I mean, taking these fade trades, that major fade trade and this major fade trade, you didn't have to worry about anything. Well, I'm happy I wasn't so pig-headed to hold on to this, because now I'd be deeper in the red. So that is one advantage of, I guess I'm not fully tilted yet on the day, because if I were fully tilted, I'd be like, nope, we're getting rid of the stop and we're going to let it run. And right now I'd be on the red, adding to my situation already on the day. And I stuck to the plan. The plan just didn't play out this time. Like, I'm sticking to it. And granted, this should be about 1.5K less due to that crazy fucking slippage we already had today. So I should be at a loss of 2K. And honestly, at that point, I would have almost been back to break even. So from a pure theoretical, like a perfect entry and a perfect exit point today should not have shaped up to be as bad as it is. Damn, what a pump, what a dump we have going on. What the hell happened? Was there new? Like, that's, what the fuck? Look at this. Pump, 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 pump. Dump, 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 dump. Talk about, Jesus, man. Now I'm really happy I got out when I did at break even. This is the power of break evens, because remember, it can always get worse. As shitty as that was for me to see, you always have to remember it can get way, way, way worse. And right here, I got out at 30. That was another 50 points at 2 contracts. Instead of being down 3.5, I would have been down 5.5 if I held it to this point. It can always, always get worse. So when you have the opportunity to just make the worst case scenario nothing, neutral, you should probably take it. Like you should, especially in futures where there is no pattern day trading and you could trade as much as you want and there's not necessarily that pressure to get every trade right. Go break even. Because right here, did that suck watching this? And then all of a sudden, like, yeah, I thought, oh, fuck, it's going to go against me, like as it did already, like knock me out and then recovery. But look at this. You protect yourself. And as much as like we sit here and joke of like, oh, like, let's just fade Matt. You do it that aggressively because every once in a while it gets way worse, like it literally just did. So like you have to, 9 times out of 10, even if you're like, nope, it's going to reverse off here and I'd be fine anyway, you have to understand that 1 in 10 times it becomes this. And then all of a sudden I balloon my losses by an extra, like whatever, like 33% or some shit like that. So something is picking up right now. Vol is picking up. Ranges are picking up. What is the news? What is the new? Is there news on this? At 11:10, White House senior advisor Hassett, the trajectory for inflation is really good. Hassett concludes remarks on CNBC. So this pump and dump starting at 11:10, okay, that's what happened. It was Hassett's interview that caused CNBC, Hassett. CNBC. Let me see if I can find it because it was Hassett's discussion.
Carl Quintanilla live from Post 9 of the New York Stock Exchange. Today, the path to Reopening.
This is
The
what
Senate
caused
sending
the
its
pump
government
and the
funding deal
dump.
to the House, expected to vote on the package tomorrow. NEC Director Kevin Hassett with us to break down the economic implications next.
Shares of Nvidia-backed CoreWeave sharply lower. Companies lowering its annual revenue forecast. Despite this surge in demand, we're going to be joined by one analyst who does cut his price target today, but sees some long-term opportunity.
And the quantum computing trade. Shares of Rigetti surging more than 100% this year, but moving lower this morning on a revenue miss. The company CEO with us later this hour.
Meantime, giving a little bit back of Monday's bounce. S&P down 1/3%, NASDAQ down a little bit more. Tech is bearing the brunt of the problem today, down a full percent on the S&P IT.
Just a wash. Joining us first on CNBC, National Economic Council Director Kevin Hassett. Director Hassett, it's good to see you.
So this is what caused the pump at 11:10.
Economic implications of a government reopening. Is it just a wash? The activity that was lost during the shutdown comes back, or is there something more we can expect maybe in stimulus as people get paid?
Yeah, I think that the way to think about what was going on, right, is over the last couple of quarters, because of the success of President Trump's policies, we've had about almost 4% growth. And we were carrying that momentum into this quarter. But then because of the shutdown, I think that the estimates from CEA and Goldman are that it's going to knock maybe 1 to 1.5% off of that trajectory. So we're looking for lower growth in the quarter. The question is, when does it all come back? And I think that some of the stuff is lost forever and some of it isn't. But I would guess by the first quarter of next year, we'll be back at the 3 or 4% growth pace.
When do we get the economic data releases? We're craving data, especially those numbers on jobs.
Yeah. Yeah, I haven't been briefed on that yet because there's been, quite a lot of disruption because of this terrible shutdown. And so, for example, I've been told that some of the surveys were never actually completed, so we'll never perhaps even know what happened in that month. And so we're going to be steering a little bit in cloudy weather for a while until we get the data agencies back up.
What do you make of some of the alternative data sources? I highlighted, for instance, last hour, the WARN notices, which are indicative of layoffs. We've seen a little bit of a spike lately. The Challenger layoff data, we've seen a little bit of a jump lately, actually the highest October that we've seen in decades. Are you concerned about the labor market here making a turn for the worse?
Well, the thing is, as you said, that we don't have the actual bottom line right now. But one of my old friends and one of the best Wall Street economists, Torsten Slok, put out a summary of all the labor market indicators. And on average, at his newsletter, it looked like things were still pretty positive, but not as high as it was in the first term of the Trump administration. But if you consider that we're also doing things like an immigration policy that's cutting the number of workers, the fact that we're still gaining jobs and reducing unemployment is something that we expect.
Right. That's something that came up today in NFIB. We mentioned it in the last hour. The percentage of employers who think quality of labor is the #1 problem, up 9 points. That's the biggest month-on-month jump we've seen in a while. You think that is related to restrictions on labor supply?
Well, I think it's also the case that one of the things we're seeing, like you saw what an incredible earnings season it's been, because AI is making workers way more productive. We're seeing that it's making wages go up a lot, and it's also making firms more productive. I think that smaller firms are behind the adoption curve for AI a little bit, and so that probably explains why surveys can count, on people saying, I wish I had better workers. I think basically what's happening is that firms everywhere want workers that understand how to use AI tools.
Agree. How much do you think AI is the investment, the trillions, how much is that driving the economy right now?
Well, I think the way to think about it, right, is that the AI is making it so that people can run their business better. I don't know if you've ever tried to defeat an AI at chess, but you can't, right? And so imagine you got this really complicated chessboard of a business, and now all of a sudden AI is helping you run it better. And that's why we just had like a record for success in terms of positive earnings surprises, because the firms have been accelerating their profitability and productivity so quickly, and the workers have as well. Really, the adoption, skyrocketed this year, and already we're seeing it in the bottom line data. And so it really is an incredible productivity boom. The productivity data, do you remember back in the computer age, everybody was saying, well, the productivity's everywhere but in the data. But right now we're looking at about 3% productivity growth. And that's probably going to revise up once we get the data better in the future. Usually these benchmark revisions make productivity go higher when there's a tech boom. So think about it. You got underlying 3% productivity growth. That means if you get labor stock growth and capital stock growth, then you're really looking at, blowout positive growth, and you're doing it from the supply side, so it's not really inflationary. So we're really, really bullish on what's going on in the economy, and really grateful for the senators that did the job and got the cooler heads and got the economy and the government open again.
Yeah, but just beyond the productivity boom, which sure it's happening, just the investment that's flowing into building data centers and compute, just offsetting. It's not like the entire economy is perfectly healthy right now. Manufacturing has been in a slump for several years, contracting. Housing has been weak as well. Higher mortgage rates hurting affordability and supply too. The consumer has slowed down, and there's this bifurcation in high income versus low income. So I just wonder how much of the growth that you're talking about is really just the AI trade.
Oh, well, again, the reason that the AI firms are being successful is that their customers are being successful. And their customers are being successful because there's this massive positive technological change, which is improving the productivity of workers and the profitability of firms at a remarkable rate. And, I think that if you look at year-over-year consumption growth, it's about 6% nominally. If you look at investment, capital spending is a massive capital spending boom, and it's not just in the AI space. And so I think that the AI is part of the story, but the rest of the story is that we just had this big, beautiful bill, which was like one of the more powerful tax stimuli that we've ever seen, because it not only did the stuff we did last time on the corporate side, but also helps supply side tax cuts for workers with no tax on tips, no tax on overtime, and so on. And so we should be getting a big increase in labor supply and in investment, and that's the kind of thing that gives you a boom without causing inflation.
Although with the reopening, Goldman today says the reopening does raise the prospect of some reflation, plus the a tailwind from tax season, obviously depreciation and the bill's effects. Do you think fighting or getting disinflation in the first half is going to be a little more of a challenge than it has been?
Well, I mean, if you look at it, right, the last CPI report surprised almost all the Wall Street analysts, 48 of them, on the downside, meaning it was good news on inflation. And that number itself was inflated because there was a bunch of refineries shut down, if you're looking at the top line. And so we're comfortable that inflation has come way down, the 5% on average for Joe Biden. It's probably a little less than half of that right now. And the trajectory is really, really, really good if you look at it. And inflation is one of those things that has a lot of momentum if you look at the charts. And the momentum right now is headed really towards the Fed's target.
Even though it's been increasing for 5 straight months as of September?
Well, I guess if you look at it from January, there's ups and downs and seasonals. But yeah, it is surprised on the downside. People were expecting it to accelerate, and it didn't. And I think that is because this growth that we're getting is not from like printing a massive amount of government debt and sending checks to people like Joe Biden did.
Let's see if 500 can hold on
the
NQ.
macroeconomic picture. The way you get inflation down is you don't have the government spend like crazy. And we've actually got a deficit reduction so far this year that's really on track by December to be down $600 billion for the year alone. And so that $600 billion reduction in the deficit, takes the macroeconomic pressure off. But the other thing we're doing is we're like really digging into what we could do at the micro level to go after price inflation, on a
500's holding
and
as
so you
of
remember
now.
all the work we did at the beginning of the year on eggs. Egg prices are now down relative to last year, and we are looking at housing and other things that we could do to make people's lives more affordable.
Well, so I wonder how you read the message from the elections that we just had, the big wins for Democrats, not just the New York mayoral election, the governor's races in Virginia and New Jersey, because there is this feeling that people, I know that inflation has come down from the Biden era, but it's still elevated. And those cumulative gains in things like beef prices and coffee prices, the everyday items that people face are still high. And that is something that President Trump ran on. I do wonder what sort of economic takeaways you have from the big Dem wins.
Oh, sure. You make a really great point, Sarah. And the thing is that under Biden, because the inflation spiked so much, the real incomes, which is like the real purchasing power of ordinary folks, on average went down by about $3,400. And since President Trump took office, real incomes have gone up. That means purchasing power has gone up by about.
Oh no, we lost your camera. Oh, I was waiting to hear the answer on that one. Well, we thank Kevin Hassett. We got to most of it. Kevin Hassett is the head of the president's National Economic Council. He's the advisor, also in contention. Oh wait, you're back. You're back. Kevin Hassett, are you there?
Yeah.
Sorry, the shot froze.
Oh, I was
for a
just
little
about
bit.
to make my best point in history,
I know.
sir. Yeah.
I was like hanging on every word. So talk to us about the inflation story and the pain that people are still feeling.
Yeah, that again, that I don't know where I got cut out, so apologies if I'm repeating myself, but because people's purchasing power dropped by so much because of inflation under President Biden, where it went up to almost 10% and averaged 5%, then real incomes, real purchasing power dropped by about $3,400 over the entire Biden term. And since President Trump has took office, we've been focusing on affordability and helping purchasing power go up. And it's gone up by $1,200 right now already this year. But people are right that we haven't actually closed the gap. We haven't filled the hole that Biden dug yet. And they're right. If you go to the grocery store, I'm the shopper in my family, and I was looking around at prices of hamburger and milk and everything just this weekend. And they're still way higher than they were when President Trump left office. And that's something that we're working really hard on.
So should the Fed be cutting rates in December? Chair Powell kind of made it seem like it wasn't a given.
Yeah, I was disappointed in what Chair Powell said in the following sense, that if you think about it, between the last two meetings, what happened is that we got a government shutdown, which was probably a surprise, and we got an inflation number that was much better than expected. And so it didn't make sense that that news would make them more likely to cut in December, and yet somehow they came out of the meeting saying they're less likely to cut. And I was kind of befuddled by that statement that they were doing, and wondered again if they're once again doing something political.
Finally, Kevin, I wonder what's more likely, a $2,000 tariff rebate check or a 50-year mortgage?
Well, I think that they're both really good ideas. The fact is that we've got
50-year mortgages are the dumbest fucking idea.
And the interesting thing is that it's not just because of tariff revenue. We've had a big positive shock to income taxes as well, because people's incomes are so much higher. And so back in the summer, when we were saying that for now, let's think of the tariff revenue as something that reduces the deficit, there's more room even for deficit hawks to think about rebate checks like the president talked about, because we've actually done such a good job cutting spending. And the supply side effects, the Laffer curve effects of the tax cuts have actually made revenues go up. We're up about $200 billion relative to last year in revenue as well. So it makes room for it. And in terms of the 50-year mortgage, the bottom line is that it would reduce the monthly payment. We've got a real problem in America that too few people are getting that first home, and the age of first-time home buyers has gone up by about 10 years
mortgages,
over just
even
the
if they
last few.
become a thing.
And so President Trump is really focused.
The math does not math on a 50-year mortgage. You're getting a slight break on your monthly payments for paying such an extraordinary amount in the long term.
It's good to hear from you.
It's great to be here.
Thank you. From the White House.
As we're talking, getting some Boeing orders and deliveries, let's get to Phil LeBeau. Hey, Phil.
What's this?
Hey, Carl, let's start with deliveries last month for Boeing because of the importance of the 737.
All right, so that whole speech is part of the reason why we pumped, and then the fact that I guess it was nothing, we dumped right after. So I'm hoping that one of them's a fake out. Either the pump or the dump's a fake out, and we're about to recover and go to the intraday high, or we're about to puke and really just hang out below the lows. I'm watching the 1 minute super trend on SPX here to see if not only can flip green, but take out these recent highs, seeing some higher highs and higher lows. And the NASDAQ, as it's been all day, is lagging a bit behind, but same thing. We saw a pump, we saw a dump, and it seemed to be somewhat news related, but as I showed you in real time, the price perfectly reacted to the 50% retracement of the initial balance. So clearly, that just means that there's a lot of algorithms who were saying, okay, what was the trend of the day? Let's see if we could create a position there. And they got paid big, 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 big. Oh, brother. We're seeing the signs of a recovery. Maybe. I don't know. Here's a look. The Mag 7's not looking the best. The S&P 500 is still pumping. Yeah, granted, there's that pump and this unload. It's starting to fight back. It's starting to fight back. The Nasdaq is clearly lagging me. Look at that. The SPY's getting that nice movement. Almost back to the start of this sell-off bar. And then the Qs are actually in the bottom third of their sell-off bar. Maybe I should have just leveraged it on ES today. Maybe I should have just leveraged it on ES. 5-minute on ES is trying to go green. 10-minute is actively testing right now. 30-minute is green after taking out that recent high. We had the wick up and the wick down. So dancing around, doesn't really know what side of momentum it wants to be on. If you look at the NQs, no. 5-minute is bearish, 10 minutes bearish, 30-minute is bearish. He broke that down. That's not good. We're just waiting to see if this is actually the bottom 500 here. And I think a big win is if we can recapture and hold above 60, setting us up for a test of the 50 EMA on the 10-minute and also this key 600 level, which has been a key reactionary level for the past 2 weeks worth of trading. So I'm watching this shelf at 560 for bulls. And then from there, my upside target would be 600. On the flip side, it's if we break 500. So you're either watching 60 to the upside or 500 to the downside. NQ clearly is weaker. S&P 500 is putting in a bit more of a fight. The Mag 7 flow is not looking the best. The Nasdaq was looking good, got goosed. S&P 500 is looking way better. So we're in another day of things not really matching up, which is actually a perfect day to not trade at all. Or if you have to worry about your trading days, you could just get in one scalp trade. So based on that mismatch, I think a very fair criticism of what I've done today is, Matt, why are you taking any Icarus signals whatsoever? It's too much mismatch. Why are you doing this to yourself? That's a very, very fair criticism. A very fair criticism in all reality. Fuck. It's having the hardest time. The Nasdaq is having the most difficult time breaking this shelf. There are people loaded up to sell at 55, 60, and 70, especially 70. 570. I was calling out 560 before. It is interesting to see that we had people there. But look at these shelves. 55, 60, and especially 70. So other things to consider for your upside targets. Obviously, these are dynamic. Dude, what the fuck is happening? We are slicing through these like it is nothing. This is just not a fun day to trade. Not only is there mismatch, I thought things would be a little bit more quiet with the bond market being closed. And in a certain sense, if you zoom out and look at the 30-minute chart, you'd be like, yeah, it is kind of quiet. But intraday, like these ranges on NQ are still so fucking brutal. And I just cannot seem to get on the proper side of it. And I need to figure out how to de-risk. I just don't see a good opportunity quite yet to de-risk because we really haven't moved anywhere since 11:30. But yes, I will keep these in mind. I just want to let you know, because these orders are here right now, doesn't mean in the event that we trade all the way up here, it doesn't mean that we're necessarily going to, like, they're going to be there at the moment we get there. They could choose to let it get filled, or they could also pull the orders. These are just passive sitting sell orders, some at 55 and then equal amounts at 60 and 70. Why at 60? Well, 60 is seemingly the equilibrium point that we're seeing on NQ right here. See where my cursor is? 60? It's just where we've chopped. It's like a nice cut point. And then for whatever reason, what was the other one? 70 is undershooting where we've been. I mean, we got up to like 90. So the 70, I guess maybe they're just playing a slight overshoot, but we'll see. This is getting painful. 52 is the super trend flip on the 1 minute. And in reality, we had that fake out pop, got smashed back down to equilibrium, and now we're just like not trending at all. I'm cleaning up my charts a little bit. S&P 500 did get a bullish super trend. We are attempting to hold above 15. That's a decent win. This is like the worst trend line. It's just so, the angle of it is so extreme. But we're attempting to hold 15. I'm looking for the recovery to this down sloping trend line, the high from 955 connected to 1120, which is around 825, which was a key level yesterday. So basically watching the height of this 1120 pump to see if we could recover to it. We've recovered about 50% on the S&P 500, but before, when we recovered 50% of the initial bounce, we got blown the fuck out right after it. So it's not the end all be all, folks. As always, this is just a game of do your best to identify trend and see if you can get it, but understand you're gonna be wrong a good chunk of the time. Especially when trading futures, get your stops to break even as quickly as you can. That's one of the biggest things that I could tell you of my recent runs of success that I've had. It's just because I stick exactly to what Icarus does, which is like a hardcore system for moving your stops. It's all about protecting your downside. The wins are going to come. You don't know when they're going to come, so let them just happen naturally. You don't need to force anything, but what you're in control is controlling your pain level. Maybe that's a good way to think about it, is you are not in control of your success level and how much the green P&L is going to be, but you are in control of the pain level. So that's what you're in control of, so manage it accordingly. You're not in control of the next bar going in your favor, but you are in control of the fact of if it goes against you, you know where you can reasonably stop the pain. I think that's a really good way to think about this. And maybe this is a crazy W setup. Dude, fuck this bar. This bar fucked a lot of people up, myself included, at 1125. If you got goosed on this, I mean, we came all the way back down, dude. Brutal reaction. I'm break even on this trade right now. I'm long around 32, which happens to be I'm basically long at the initial balance, playing a recovery of the initial balance. I'm still overshooting it to try to get to 600. I think if there is a recovery today, we're doing that. And then if I get lucky, I could play it all the way up to the top side. This big trade that I had that got knocked out for break even, though I didn't make any money, once again, I'm in control of my pain levels. I was able to get out for break even, so I didn't have to stare in the face of this drop. Granted, if I held it to this moment, I would be back to break even, but you never know, because this vomit could have just kept going and going and going. So ideally, as you can tell, I got in here at 1136. Since then, we haven't moved. But if we start to push that 60 level, you can bet I'm moving my stop to break even. Just once again, I'm in control of my pain management. I'm not liking the fact that it keeps getting rejected here. In fact, it makes the trade abnormally fucking horrible for me. And it's also the shittiest part of the day to trade, unfortunately. All right, we're going to mark that out. This is, well, we're right. I don't know. This is such an awkward trend line. I don't really like it at all. But you kind of get the point that we're holding 15. 22. Yeah. I'm looking for a recovery of the 1125 high on SPX, on NQ, whatever you want to call it. Yeah, I'm looking up here. Well, that popped. Fuck. NQ just broke something. Son of a bitch, dude. It's just too choppy of a, like, in all reality, I understand if you're really, really honed in on the 1 minute or something, it might look like there's movements, but literally as soon as you go to the 5 minute, you're like, choppy, bullshit, pop, drop, choppy. Like, this isn't a trend day. This isn't a day of making big money or good money or anything like that. We're just chopping all over the fucking place. So it's especially going into lunch right now. You set alerts for like maybe quote unquote extreme movements that suggest a trend has actually been created. But for right now, we're in purgatory. We're in chop sideways. You have to wait for it to end. I wish I had no positions. I wish I haven't traded at all today. I wish I did my one little bullshit trade at like before market open, get in, get out for a tick and move on with my life. And instead I'm fucking stuck managing something that I'm effectively relying on pure luck to get out of. because it's nothing. Like, what do we have to fucking go off of? Yeah, we have nothing to go off of here. That was yesterday. Beautiful trend. Yeah, sometimes you have nice trending days. Other days you don't. And today could still switch. For all I know, maybe there is a trend later on. But for right now, based on what we have, we are not breaking above the shelf. We are not breaking below the shelf. The SPY is showing a little bit more of a bullish trend. Granted, made this higher low, recovered. We're seeing some higher highs, higher lows. This high wasn't a fresh high technically. And maybe this is now a succession of lower highs, which is you should be like careful of. But overall, it's a choppy fucking mess, man. I mean, the options flow is actually getting worse on the Mag 7, which is probably part of the reason why it's not recovering. The S&P 500 had a nice recovery, which is completely at odds to the Mag 7. Mag 7 is down. S&P 500 is up. I mean, and you could even see how choppy this is here. Look at the 5-minute. Bullish, bearish, bullish, bearish, bullish. Like, that in itself tells you how choppy it is. The market doesn't know which way it wants to go. And then the NQ is leaning it a bit more bearish. I fucking hate my position. I hate the trade I'm in. Granted, I was disciplined enough to wait and take the Icarus signal. I should have just skipped it though, because Icarus is only taking in NASDAQ data. Looking at the SPY data and the differential between the two, I should have been like, nope, skip. Should have fucking skipped it. Oh, now it's just management. I don't know what to do. I mean, this isn't looking good. Every time we go up into the cloud, it's just getting knocked. Up into the cloud, knocked. Up into the cloud, knocked. And then this one, who knows what this is going to do? You can't even say it's into the cloud because it's over the cloud, bullish, under the cloud, bearish, over the cloud, bullish. Like, it's just, there's not all trading days are built the same. I know a lot of us, especially like if you're a day trader, scalp trader, you want them to all be built the same where you have a lot of opportunity every day. But in terms of those nice, beautiful trend days, they actually happen less than 10% of the time. You're lucky to have those like once every 2 weeks, those beautiful trend days. You really are. And today might become one in the afternoon, but based on this information, we're not seeing shit, brother. It gets interesting if the Qs can get above and hold above 619. And I would say the same on 680 for the SPY, if it can actually hold 680. And you're basically just watching this breakout of 26 up here. You're hoping it holds 15. Matt working overtime. Yeah, I'm mentally exhausted at this point. I'm going to keep you guys updated because I attempt to be the most transparent person in this particular space. I'll let you know how it goes. Right now, my current trade is break even. I have a bullish position at 31. I'm long 2 contracts. On the breakout and hold of 50 or 60, I'll move my stop to break even. And then I'm praying that 59.9599 gets hit. And then after that, if this trend is strong, 42.50, the other end of the initial bounce. That's the play. I'm trying to reverse one initial bounce, the low, all the way back up to the high, and I plan on unloading one of my trades roughly halfway through. That's the goal, break even. I don't know if it's going to play out. I'm trying to recover at least 2/3 of this. I have a locked-in loss of 3.5. So if I can clear up 2,000 of this problem, maybe 2,500, I would consider that to be a big win because that means I'm only down a K on the day, and that's completely manageable. So I'm hoping that this is just a higher low and I could just ride this higher. I'm looking for a full day recovery, but when it comes to trading, fuck man, wish in one hand, shit in the other, and see which one fills up first. What I really care about, what I'm hoping for, is this push to 50, 60. Let's see. To 60, we'll call it, maybe even 70, maybe just 60. I'll cut it because we have 55, we have 60, and we have 70. I'm looking at 60 here. If we can hit this right here, right there, 60, stop to break even, free trade, and then maybe I could just catch it. And hopefully it's not like what we saw before where it was a pump, didn't quite hit my target, comes back, knocks me out of break even. Probably should have bailed on this at 47, but look at this. Like every single time it looks like it's going to get going, it's just getting smacked. We touched the initial bounce 1, 2, 3, 4, 5, 6 distinct times. We've tried to get back into the initial balance the first hour range. And we just can't. Rejection. It's just every single fucking time I think we're going to get going. And look at the EMAs. They're choppy sideways. It's shit. If you don't currently have on a position, count yourself lucky, because there's nothing to be doing right now. Like, there really, really isn't. Maybe it changes, but on this, I get you can maybe take a long and have the tight risk. You're in at 26, you're risking 16, 10-point risk. As soon as it breaks out, stop to break even. Maybe that's an opportunity for you. Maybe. You just have to wait. Don't force something that's not there. I just keep feverishly updating these breakout and breakdowns, and we're going to see. This is actually a far better one for me to now use. Yeah, I'm kind of using this overall structure, these lower highs and these higher lows, waiting to see which way it breaks. Pretty much here too, looking for that breakout. Before I let you go, here's a look. Mag 7 did hit a low, showing a little bit of reversal. S&P 500 trying to push its way upward. Looking at this, we do have positive gamma now above and below, so maybe not so much craziness from here on out. I would love 840. I would love 850 on SPX, but once again, let's see. There is seemingly support at 6795. 800 is a big level. There's a lot of support at 70. Actually, fuck, man. Oh, fuck. I didn't post it. All right, shit. I'm putting that in there. It's 5 minutes late, but Piper's in there. Fired off at noon. If you're in the Discord. It fired off at, yeah, so sorry, my apologies. It's 4 minutes late, but I will put the prices as if it was at that time and not the time it was meant to fire. That's only fair. But anyway, folks, that's what I have for you. Before I let you go, if you're using Apex, don't forget to use the code Goonie. You have 2 more trading sessions to take advantage of that. And also, we've been talking a lot about Bookmap today. The best deals for Bookmap also in the description of the video. So there's a link for Apex. There's a link for Bookmap. You have my trading plan. I will update you guys all on Twitter later today to see, ooh, fuck, is it going? Dude, I look like trash, dude. I look like a man who's having a rough fucking run of it. All right, I'm updating my risk a little. Dude, I just want to take out 60. Take out 60. Let me move my stop to break even so I can stop digging this fucking hole I'm in. Hey, if I went long 10 contracts right here, I would have been good. Shoulda, coulda, woulda. Come on, take out 60. I just want to move my stop to break even. I just want to take all risk off the table just so I know I'm not digging further into a hole. All right. $31 or $15. Icarus calls for 15 right here. Psychologically, I feel more comfortable with 31. Because we're about to test that 70 level. Right here. We're about to fucking steamroll this guy. This jabroni. Take him out. Take him out. Fuck up his day. Fuck up his day. Don't get rejected. Boom. Boom goes the dynamite. All right. And we're going up to VWAP at 86, 87. All right. Stop is to break even. It is a freebie play. I'm not saying I'm smart, but I'm at least smart enough to not go deeper into a hole. I am at least smart enough. So the worst case scenario, at least on this trade, but we saw how the past one went where it came back and got me. Let's see if we can actually do something fucking right this time around. Oh, that would be a nice 70-point trade. Please don't do this again. Don't do this again. Don't do this again to me. I don't know if my feeble heart can handle it. Come on. Just be a higher low right here that we could play off of. 58. Give us that beautiful higher low. Come on, brother. Give us a higher low, a nice risk point. 58. Take out 75. Rip it to 90. Rip it to 600. I would love to use 58. Honestly, I'd probably move my sup up there even if we get to 90. Even before locking this in, I might move my, like, just hold this level. Hold the door. Hold the door. I love this wick. We're touching the 10. Now just go off of it. No, wrong way. Wrong way. Hold it. Okay, we're wicking. Hold 60. Oh, whoa. Okay, so VWAP is, I don't know, 87. But look at this. Wow, that's a lot of contracts. 605. Generally, when we see these red zones, it's because of like 50 to 75 contracts. There's 1,100 up here, scattered between 95 and 600. Look at all those sell orders. Holy shit. Holy shit, man. All right, well, if you guys are also attempting to ride this up, hopefully you have book maps so you can see if this changes or not. But 600 and 500, there's 1,100 contracts trying to stop this smack at 600. Wow. It makes me almost wonder if I should move mine down to 95 just to lock in some profits here. Holy crap. That's a lot of contracts. That's a crazy amount of contracts. All right. Well, be mindful of that. People selling at 90. There's VWAP. The point of control is at 620. There's a lot. Okay. So in between 85, 585 and 620, as of right now, there's a lot going on. Just be very mindful of this, I don't know, 35-point region. That's crazy. Well, if you want to watch it and see how it plays out, that's what Bookmap's for. It's in the description of the video. But I need to call it. Folks, that's what I have for you. Sign up for Apex with the code Goonie. You have 2 more trading sessions to take advantage of that. Sign up for Bookmap. The link's in the description of the video. We'll be posting an update video later on today, and then we will be streaming once again tomorrow morning. Remember, the name of the game is your risk management. You cannot be in control of what your winners are going to be, but you can be in control of how bad your losers are going to be, and that's what the best traders do time and time again. That's what I have for you. I'll be posting my updated trades after the market closes or when I decide to stop trading today, but I'm hoping I could survive today so I can put in another request for $30,000 on Apex. That's what I have for you. I'll catch you guys later. Peace.